Hello, everyone.
Hello.
Okay,
Hello.
class, I will not note anything in case you want to ask any question. So if you have any question to ask, so I will not note anything you can speak. Okay. Okay, everyone. Okay. So today's class, we're talking about emotion. Okay, give me some minutes.
Everyone mute, please.
Okay, I'm trying to bring something out from the group chat. Okay, guys, give me some minutes. I'm trying to bring something out. Okay. Okay, before we proceed, are you guys hearing my voice so that we know before I proceed?
Yes.
Okay. Okay, I will not mute anything for now. And there's one thing we are going to do today. I'm going to test everyone. So there's one thing I will do today. I'm going to test everyone. So I will not mute anything. So everyone will speak. Okay. Today's class is all about candlestick psychology. What we see in candlestick psychology and what we observe when we are trading on candlestick psychology. And the topic I said that we are going to be preaching today was what is emotion and how to manage it. Number two, finding SNR levels. I think that is the major problem. I don't think so. Number three, how to analyze and find the next can. That this is the exactly major problem that most of traders are having today. How to analyze each candlestick or analyze the market to find the next candle. And it's very simple. So today we are going to be teaching on that and how to read candlestick wicks. How to read candlestick wicks. I will show you step by step on how to analyze candlestick and how to read the candlestick weeks. So before that, let's talk about the first one, the first topic. The first one that says, what is emotion? What is emotion and how to manage it? Before you can decide or you can define what is emotion, first, before you can manage emotion, you first define what is emotion. You first define what is emotion. When we talk about emotions, emotions entail so many things, even both in life and everything we do. Both in life, everything you do, emotion entails everything. And the major problem of emotions is that how can you deal with emotions? How can you deal with emotions? Now, before you define that, before you deal with that, first define what is emotion. Emotion is a strong feeling. It's a strong feeling deriving from one's circumstances, mood, or relationship with others. Same thing in trading. It's a feelings or a negative thought that you have while you are trading. And this should be considered the first case, the first issue before you place your trade. Okay, Masquare, maybe you should check your side here. I think there's no voice issue here. Okay, what is emotions and how to manage emotion? Like I said, like I was saying that emotions is when you feel something negative about yourself. Take for example in trading, emotions is when you feel something negative while you are trading. Okay, wait some minutes. Trying to check message. Voice. I think the voice is clear. Let me check.
The voice is very clear, sir.
Voice is very low.
Voice is very okay. It's very clear.
Okay. I think maybe you should check your side there. So everybody can speak. Maybe you should check your side there. Okay. So I have unmute everybody in case you want to ask any question. Okay. Now, as I was saying that emotions is when you feel something negative about yourself while trading. Might be something wrong on your side there because everybody is on mute. Check your side there. Okay. Let me continue. Okay. As I was saying that emotion in trading is when you are feeling something bad, when you are feeling something negative thoughts. And these thoughts control your mind. These thoughts control your mind and you can't control it. Like usually said that controlling emotion is easier said than done. And it's so. Controlling emotion is easier said than done. It's easy to control. It's not easy to control emotion, but easy to say control emotion, which is now affecting most traders today. In fact, some years ago, it affected me so much. Some years ago, that when I started trading, I didn't know anything about emotion. Once I knew that you just take trade and it takes your trade. Like I told you guys that yesterday I was overwhelmed by emotion. So since that day, I learned a lesson. And since then, I have a plan for myself. And this plan I have for myself was the plan to manage emotion. That is what is helping me today. I told you guys that I was able to double or from 1,000 from $100 to $62. And what kills everything on that same day within 4 minutes was emotion. Was emotion. It was emotion. Since that day, I learned a lesson. So many things I learned from that day. So now, controlling emotion is easier said than done. But as a as a trader, you must control it. You must manage it. You must not allow emotion to control you, but you must control emotions. You must control emotions. What are the things that you can find in emotions? What are those things that you find in emotions? Number one, greediness. Greediness. Okay, I think as you mentioned the first thing. The first thing is fear. The first thing is fear. And we have this fear. This fear, most of the time, it can be controlled and it cannot be controlled.
E o último
Fear of losing.
cara é até recente, falando sobre o impacto do volta a girar na direção.
Hello, please lower your voice. Okay. The fear of missing out. These are one of the emotions that you must control as a trader before you become a trader. You must learn how to control fear.
Realmente obra de almas.
You must learn.
Pode ser de outros materiais, né? Tipicamente. Ou drone.
É verdade.
Aqui, ó.
É verdade.
Aqui, ó.
Okay. So you must learn how to control this emotion we are talking about, which is number one thing in life is fear. And what is that fear? The fear of missing out. Like I said, let's take example of me. That day, I will never forget in my life, even if I grow up to 120 or something like that. I will never forget that day in my life. I never knew what we call emotion. What I know is that you take trade, you place your trade, and you get out of the market. But I never knew that the biggest enemy for trader is emotion. How do you control it? How do you manage it? So that day has given me a lesson. Okay, maybe I will do that right now. Okay, so let's continue. The first thing is fear. Fear of missing out. These are the major problem of traders today, that they can't control fear. They can't control fear. And what causes fear is that for you staking high or for you placing your trade by increasing the amount of your balance, by increasing it, this fear happens all the time when you do that. And there are some few ways which you can, there are some easy ways which you can control this fear. You can control this fear by not staking high. Okay, many traders I have been talking to feel this way right now is that It is not uncommon. Okay? Fear is not uncommon. It is something that is common in life of every trader. Even though you have a low balance on your account and you want to trade with it, the fear will still arise if you are going to lose everything. But let me tell you that when you fail so many times, when you fail so many times, you will achieve what you want. Don't say because you fail, that means you have to quit. Like I said, that those that have dreams, before you achieve your goals, you must apply discipline and consistency. This is what will make you achieve your goals. So the fear of losing out will make most traders say goodbye to trading. The fear of losing out. You might have lost, like I told you that I lost almost $62,000 in 4 minutes. Not even days, not even weeks. In 4 minutes, within 4 minutes. See, I still don't quit. I still don't quit. I continue. But since then, I have learned a lesson. And I was able to control this emotion. How did I control this emotion? Like you always see that anytime I upload a video on YouTube, I always have a fixed amount, fixed balance, investment balance on my account before I start trading. So I don't increase. Most of the time, if I upload a video and you see me increasing my amount, number of investments, you see me increasing it, it is because maybe I didn't trade for that day. Maybe I only want to trade once because, like I told you guys, that I trade 3 times a day, 3 sections, 4 trade per section. Maybe I didn't have time to trade for that 3 sections, and I only have time to trade for 1 section. So that is when I will increase the amount. And if I do that, I know what is the percussion of it, what is going to come out. If I lost everything on my account that day, I won't have problem because I know that I have taken risks. So this is why I was able to control emotion. I was able to control emotions by, though there must be that fear when you are staking high. Most of the time, on my balance, my account is always $15. Anytime I want to start trading, $15. And most of the time, I'm likely to stake all the money. But this fear will arise in me. But one thing is that when the fear arises in you, don't give up, even though you lost. Like what I say that before you become a professional trader, you must lose money so many times before you become a professional trader. The 62,000 I lost was not the only money I lost, but it was the highest money I have ever lost in trading. The highest money. The other money I lost in trading was about, I think, $7,000. That's the second time I lost. That was in forex, $7,000, and it's not my fault. It's the broker I choose. $7,000, not my fault. The broker I choose. 62, not 52. 54 trades, not 52, 52. Okay. As I was saying that it is not one time when you lose and you start quitting trading. So if you know the impact of trading and you know why you want to become successful in trading, you must know all this. That if any of this happen to you, you must be able to manage it. That is fear. And how do you control this fear? Never use stake high when you are, even though you have 10,000 balance on your account. Never use stake high. At least take 10% of your balance. 10% of your balance. And never you fear, because I want every one of you to try it. Never you have the mind to fear that you are going to lose your amount, lose your account. Never you have that mind to fear. if you want to strongly become a successful in trading, don't fear. Though the fear may arise, it is not easy to manage fear, but try as much as possible not to fear. Because when you fear, you continue losing. And if you continue losing, there may be some time that you are likely to give up. So when we talk about emotions, that is the fear of missing out. Don't fear. Then the second one is greediness. Greediness in trading, most traders are greedy because they want to take the advantages or some others trader opinion. They want to adapt it to their own trading style. That is greediness. You must have something in mind which you have to do and which you must accomplish it. Don't allow greediness in your trading. Greediness will only make you to lose all the time. Even though you win, there must be a day that you lose everything. That's why I said that once once I achieve my goals in each day on my trading, once I achieve it, I withdraw immediately. And this give me a lesson. There's a day that I show some of my friends how to withdraw from my account to my Skrill account. That is what is affecting me today. So I've learned a lesson in that. Do you know that this guy went ahead and tried to access my Skrill account because I didn't observe that. I show him all my details. I show him my account. I show him everything. But I didn't observe that he also is a hacker. So he trying to access my account. So since then, Skrill company has given me warning. But I was thinking that what is happening to my account? I was thinking that, but not knowing that someone is trying to access my account. Since then, Skrill gave me something to verify, which I couldn't process it. They asked me to before I have verified my ID, verified everything, but they asked me again to re-verify again so as to have access to my account. But since then, I couldn't able to make it because of what the guy does. Because of what the guy does, so I couldn't able to access it again. Now, as I'm talking to you, that my $11,000 are stuck in there, which I never knew how I'll be able to get it. I even called their customer service. They are ignoring me. So I have learned a lesson that whenever you want to do something, do it secretly. In trading, never you allow something that your secret things to be exposed. That's why most of the time you will see me that open or showing my live account and all my trading. All my trading on YouTube are live accounts. I don't trade on demo accounts. Even though I lost because I know what I have achieved. I know what I am able to achieve in trading. So, as I was saying that greediness, when you overcome greediness, you can able to manage what we call emotions. Fear, greediness. This is the most dangerous things, dangerous feelings in the trading today. The fear of losing out when you stake high, and the greediness that you want to achieve or you want to become rich quickly. Like I always tell people that you should not ever have the mindset of becoming rich quickly. A step by step. Like I told you that since 2014 when I started trading, I don't have the mindset of becoming rich quickly. I know what is there. I know that we can become rich in trading, but I don't have that mindset of becoming rich trading quickly. So I find it the way I want. But because of greediness, And because I didn't know anything about emotion, that is what happened to me in 2017. I won't forget that day. So when I lost all my money, all my balance, I now knew that this is exactly what it means by emotion. Since then, I have a plan for myself. Now, how can you control or manage emotion? Number one, don't fear of losing out. It is easier said than done, but try it once. Don't fear. Have that mind, have that strong mind that when you are trading, you will not fear. That's why you see that anytime I trade with confidence. I don't fear if I am going to lose or anything else. I trade with confidence. Don't fear and don't be greedy. At least 10% of your balance should be what you invest on. If you have $10 on your account, start from $1 investment. That is the one of the reason why IQ option is very friendly. Start with $1. If you have $100 on your account, start with $10. Don't stake too high. Don't say you want to double that money for that day. Try step by step. Say for example, if you have $10 on your account, if you have $10 on your account, and you want to trade with this $10 each day. Let's say today you place your trade, and let's say out of 10 trades, you invest $1 out of 10 trades. And out of these 10 trades, you know that you are not going to get 100% payout. So you are not going to get that. Have that in mind. Let's say out of this $10, you place 10 trades per day. And out of these 10 trades per day, you have $8. You have $8. So this $8 is enough for you for that day. The following day, your account now is $18. So out of this $18, you place trade again, you have $8 again. You have $8 again. And now you're having $26. $26. Now out of this $26, you place trade again. Let's say this one you are investing $1. This one also $1. And this one, maybe you now start investing $2. And out of this $2, you place 10 trades per day. Out of this $2, maybe you have $16. And now the $16 plus this 26 is now $42. That means within a month, you'll have gotten something like 100. Within a week, you'll have gotten something like $100. No, we have 7 days in a week. You'll have getting this within a week, like $100. So out of this $100, let 10% be your investment amount out of this $10. And you should never say you want to take trade in $10. Maybe say, let's say, out of this $100 that you now have in your account, out of $100, you invested 10 $10. Maybe you lost this $10. The first trade you took, you lost this $10. Don't say the remaining $90 you want to invest all again. Don't do that. This is one thing about emotion. By doing this, you are greedy, and this is where you can't be able to control emotion. Emotion will now become your lifestyles in trading. Don't say because you lost this $10, then you have $19 remain left on your account, and you want to invest this $19 just to meet up this $10 you have lost, or even have more money. Don't ever try that. Try to use $10 again. Try to use $10 And let's say the second trade, you lost this $10 again. Now your balance now is $80. Don't say you want to invest this $80 again. If you try that, you can't be able to control emotions. Now, you should now stay low. Before you invest $10, you invest $10, you lost this two. Your balance now is $80. Don't do that again. Invest $5. The feelings of you investing $5 will be lower or will be lower than all the feelings that you have in $10 which you have lost here. That means you say you invest $5 out of $18 you have $80 you have in your account. Your balance now is 75. So you'll be rest assured that you will want this trade. And once you want this trade, your balance now is, let's say, 90, 95, $95. Now, out of this $95, you invested $5 out of this $95. Now your balance now is $19. And you want this trade. You want this trade. Now, when you want this trade, you invested again. Now your balance now is 100. Don't say your balance now is 100 and you want to invest all this 100. Okay, I think some network issue. Don't say your balance now is 100 and you want to invest all this 100. Start again from the beginning where you start before, $10. So the feelings that you have lost this money before, the feelings that you have lost this money before, this $10 twice, you will not have that feeling again after you attain this $100 and you invested $10 and maybe you won. You will not have that feeling again. You will have full confidence that now you are on the right game. So out of this $10 you invest in this $100 and you have something like $110. So now continue using $110. Now if you lost twice, continue using $10. Now if you lost twice, lost $10 twice, don't take $10 again. Reduce the amount to $5. Now, after you reduce the amount to $5 and you still gotten what you have lost, you got it back. And maybe at the end of the day, you have $200 on your account. $200 on your account. Now you can stake $20 per investment. You can stake $20 per investment. So from there, this is how you can be able to grow your account. This is how you'll be able to grow your account. The feelings of you losing all this trade will not be there when you abide with the rules of emotion, of controlling emotions. So the feeling of losing more trade will not be there. Like I said, that if you don't lose so many times, that means you are not on the right path in trading. You don't lose so many times. And you might be asking yourself, how many times do you feel, is it possible for you to be losing before you become a professional? Like I said, that if you lose so many times in trading, that means there's a day will come that all these losses that you have lost, you will regain it back. The day is coming. All these losses you have lost, you will gain it back. Because you are able to control what is emotions. You are able to control other emotions. You are able to control what is fear. During the time when you are failing, you are able to control what is greediness. Now, another thing about controlling emotion is having a plan for yourself. Most of traders nowadays they don't have plan. They don't have plan. What they think is just going to the market, open their chart, jump into trading and start trading. That is not the plan we are talking about. The plan that you have for yourself is, let's say, for example, Like the plan I have since the time I lost $62, the plan I have for myself that day is that from that day on, I will start taking 12 trades per day, 4 sessions in each trade, in each session, 4 trade in each trade, in each section, 4 trades. So these are the plan I have for myself. And the second plan was that I will not take high. Once the market is good, that is where you see me increasing the amount. Once I see that the market is not good, I will not take high. It is better not for me to take risks than to take risks and regrets. So it is better for you to stay away from that. Don't take high when the market is not good. And first thing, before you take trade, first analyze the market. This is part of controlling emotions. First analyze the market. Don't say you just open your chart, then you start trading, but you never observe what you see on the chart. You never know what you are seeing, and you never think what the market is doing, what the buyers and sellers is doing. So once you saw all this, once you are able to control this in trading, let me tell you, you can become successful in trading with ease. And the way I trade is that it's just like a pure magic, and it's true, it's a pure magic when you study hard. But with you, it's not a pure magic if you don't study hard. You know, problem? So when you are trading, you should always think about emotion. The problem about emotion is that you can't remove it totally in your life, but you can manage it. It's just like saying you have $10 on your account, but this $10 cannot help you to anywhere, and you want to manage this $10. There are some rules that you must follow to manage this $10. That you will not overspend it. Okay, I will do that. I will do that. That you will not overspend it. For example, you have $10. Out of this $10, then you want something and you want something, and out of this $10, you want something, and you want to manage this $10. You don't want to spend it at once. Just take out of $10, $1 or $2 or $3 or four. Don't say you want to use everything because you want to manage it. And you want to manage this $10 for a whole month. That is the highest money you have with you. You want to manage it for a whole month. Don't say because you saw something that is most stylish or something that you like so much, and you want to use this money that you have, the last cover in your hand, you want to use it to purchase that thing. Don't do that. Try to look for something that is lower. Try to look for something that's lower. So this is what I mean by managing emotion. Because if you try to use this a whole $10 to purchase the something that is too high, like say let's say what you want to purchase is $10, and you use this $10 to purchase everything. Now you don't have anything count, you don't have anything with you, you don't have anything left with you. That means that if anything should happen to what you purchase, you won't be able to have this $10 again. You won't be able to have it. So you should try to manage it that you go for something lower. Purchase anything that has lower price. Anything that has lower price. Purchase it. That is the secret success of trading. Trading. That is, you buy low and you sell high. You buy low, and you sell high. That is one of the secret saying of forex or trading, anything about it. You buy low and you sell high. So many people want to be buying high because they saw the market going up and they want to buy high. But the golden rules in trading is that you should buy low and you sell high. So if you are doing this, you will become successful in trading. Another thing now to control emotions is that Never you allow anything to distract your mind. Most of the time, you might be wondering that why I take trade so simple. What is exactly am I looking at? Or what am I thinking for me to be able to take trade with ease without even struggling? What am I thinking? You might be asking that question. What am I really thinking? There is nothing I'm looking at is apart from the chart. This is what is happening to me when I start, if I want to start trading. Number one, once I look at the chart, I will try to understand what the market is doing. If the trend is uptrend, I know that the buyers are in power. If the trend is downtrend, I know that the sellers are in power. Now I will not be looking at it. How this market is now behaving in this area. Does it mean that the market is doing like this when they reach this buyer's entry? That means that the buyers and sellers are now in the same level. So don't let anything to distract you. Focus on the chart. Focus on what you are doing. Don't let anything distract you. Focus on this. Like most of the time, I always be in a secret place before I upload anything on YouTube because I know that if I should get anything distraction, it might divert my attention. So I will focus on it again. So one thing I will do is that I will just stay away from any noisy place because anything that might happen, maybe a flashing something that just happened to you, and maybe by the time you are thinking of what the market is doing, that thing just happened immediately. Your mind will not be in the trading again. Your mind will not be on something else. And secondly, when you are trading, don't, okay, no problem. When you are trading, don't do anything else. Let your mind focus on what the trading you are taking. Don't do anything else. Let your mind focus. And you should try to think deeply. So for me, when I take trade, I look if I saw a candle like this. I saw this candle, and again, and I saw it some momentum here in this area. The first thing I do, I look at where this candle is from. My mind will tell me that this candle is from at this so point. Now, this also point that this candle is from, where does it start from? Is it from here and it ends here? So all this that I'm doing on the chart is that I don't have anything that will disturb my mind. This is what my mind is thinking about it, on the chart. This is what my mind is looking. This is what my mind is observing in the market, not anything else. So if your mind is observing anything else like money or what to eat or anything else, this is where emotion will now come in with full force for you to for you to have a losing trade. Emotion will now come in. By the time you are analyzing this market, your analysis is good. But something just happened immediately. You lose focus. When you lose focus, your mind will not be there. Your mind will not be at where you expected the market to be at, but you are not analyzing what the market is doing. So you are only looking at the level where you expected the market to be past. Because one thing has distracted your mind. You should not allow anything to distract your mind, to distract your attention while trading. This is one of the gateway why emotion come in. One of the gateway that allow emotion to come in your trading while you are trading. So you should not allow all this to happen. Don't be greedy. Don't fear while you are trading. Don't be greedy. It is better for you to be patient enough to be making money in trading than for you to dream of becoming successful in trading, or let's say you want to become a successful trader in one day, which is not so. Like I said, that overnight, becoming rich overnight will not help you improve your trading life. So don't think of that you want to become a trader. And something about the market is that something that is about that is on the market is that whenever you are trading, the market always does something on its own. If you place a call option and the market doesn't want to go for a call option and go for put option, there's nothing you can do about it. It is just that the market is doing its own. So it is for you now to understand what the market is doing before you place your trade. That's why most of the time before I place my trade, I will say, yes, the trend is downtrend, the major trend is up, and there's a level here. So I know that the uptrend that is going, that the market will reverse at any point or any level, which I know. So my mind is always 100% there, not anything else. If I should be thinking on anything else, maybe 1 minute, I just look at the chart, then I just think about a few minutes or a few seconds on what is happening in my then I distract my attention to another thing else. Before I know, I lost this trade. Once I lost this trade, I will not say, wow, that means my prediction is not good. See the same thing, because of what I lost, my spirit will still be telling me that you're supposed to play that trade. So these are the games that the emotion will be doing in your life. You say you're not supposed to play that trade. Don't supposed to place a call option instead of put option. But you don't know the reason why you lost this trade. So don't allow anything else to distract your mind, to distract your attention while trading. And when you are trading, don't stake high. Take at least 10% of your balance. Take at least 10% of your balance. Don't stake high. When you are staking high, you won't get it. You won't be able to control your emotion. Don't stake high when you are trading your account. Like now, let's say this is my live account. I want me to stake this amount, this amount of my account. I won't do that. If I have this amount on my account, I won't trade or I won't invest this amount on my account. I won't do that. It is either I reduce it to $1, 100, or even 10 if I like. So if I should do this, the fear of me losing this amount will come up, because I know that if I should lose this amount, there's nothing else I can do about it to recover it. If I should try to fight with the market just to recover it, then I not double the amount to be 2,000. What if else that my entry is late, or the candle closed as a doji and I lost again 2,000? So this is where the emotion will now control. You have full access to your life, to your trading. This is where the emotion will now have full access to your trading. So once you have this, once you lost this $1,000 on your account, just relax, because you know that this amount is too big. This amount is too big. Why you lost it? So just relax your mind. At least come back later to the market. At least let's say within 5 minutes or 5 seconds. Come back. Come back later and try to sit back by analyzing the market very properly before you place your trade. Don't place your trade blindly. So this is what exactly that's affecting most traders today, that emotion in trading will always overwhelm their life when they are taking trade, because they don't try to avoid what causes emotion. Emotion cannot leave you, or emotion cannot say goodbye to you except you manage it. So you are welcome. Emotion cannot say goodbye to you except you manage it. Managing the emotion will help you in your live trading. And once you are seeing all this in trading, try to understand what you are saying. You can see that here the sellers are in power. Here But previously, you can see some buyers entry here, some buyers, here some buyers. But now the sellers are in power. And what is happening? What are you observing in the market? You are seeing a range. That means all these things, all this analysis that you are doing on the chart is that your mind is 100% focused on what you are doing on the chart. Never you say you saw this, when you saw this on your chart, and immediately something just distract your attention, then focus on it again. Maybe you went again, start browsing. Before you come to the chart, you now say, wow, I saw a bearish momentum. Okay, the next level is about, but you never know what this bearish momentum is. Is it the power of sellers? Or is it that the buyers will try to come in at any time if the trend is uptrend like this, or the trend is downtrend? So you should not just take trade without analyzing. And you should not take trade when you are being overwhelmed by emotion. Don't stake too high, stake low. And always practice. That is one thing about trading. If you practice enough, and you feel confident, then you can now go on live trading. If you practice enough and you feel confident, then you can now go on live trading. You may be asking that how many times or how many days, how many years should you practice before you become a professional trader? My answer to that is there's no limited, there's nothing like limited training or practice trading. You can practice all the time. Practice, you can use 10 years to practice, but still you need confidence to trade on live account. So the confidence is that when your winning ratio is high than your losing ratio, this is where you now come in and take part in the live account trading. Never you say because you trade and you have losing trade or you have winning trade all the time, losing trade all the time. Try to test your ability again from the beginning. Try to test your ability again before you go on live account. And one thing about trading is that trading doesn't obey anything about if you lost. If you have a losing trade, there's nothing you can do about it. And if you try to fight back the market is will try to do its own. So you should not fight back. If you fight back, you will end up losing your money in trading. So while you're trading, while you're losing in trading, don't give up. Don't give up. Like I said, that to achieve your goals, you must apply discipline and consistency. Don't give up. Be consistent. Take advantage. Be passionate. So this is what will help you in trading. The things you do in life should always be the same way you do in trading. So be consistent. Don't give up. There's a time that it happened to me that I decided to stop trading because when I see that anytime I take trades, I always have a loss in trade. I place this, I place call, I lost this trade. I buy, I lost. I sell, I lost. So what is really happening? For that day, I try to take trades, 10 trades for that day, try to have a plan for myself. But still, I still lost the whole 10 trades. But something that came to my mind that should I quit this trading or should I proceed? This is one thing that you come to your mind. Should you quit trading or should you proceed? But if we really know what you want to achieve in trading, you should know that you should apply discipline and consistency and be persistent. Don't give up. Take advantage. That's why you see me, my Gmail account is called Sniper Trader because I always snipe the best opportunity in the market. I don't take trade anyhow. So be patient. Have patience when you are trading. If you are to take trade here, say for example, if you are to take trade here and the time is not with you, don't say you want to take trade. Wait for the time. Wait for the right time to take your trade. You might take trade and you want that trade. Also, you might take trade and you lost that trade. So wait for the time to take trade. And secondly, if you are analyzing the market and maybe you try to analyze maybe you want to place a call option and your analysis is telling you to place a call option, and at the same time the opposite side of your analysis is still telling you to place a put option, never you take trade on that type of market. Try to avoid. If your trading analysis is 50-50 with buyers and sellers, don't take trade. Most of the time it happened to me that if I know that, okay, here I'm supposed to place a call option, but now I'm seeing a strong buyer. If I should place a call option here, then that means they seeing a strong buyer or the opportunity of seeing a seller's entry again will be that I will lose the trade. I will not take trade. If I know that I'm going to take trade again, I will analyze candle. But if I still get the same result, I will not take trade. I will just give up for that trade, change the pair. So I will not take trade if I don't have confidence, if I don't have the full confidence of taking trade at that moment. So when you are trading and your analysis is 50-50 with the buyers and sellers, don't take trade. Stop trading for that moment. Don't take trade. Stop trading for that moment. Give a chance. Or you change the pair. As simple as that. So this is how you can control emotion. Like now, you might see that this is downtrend. And this is strong buyers from this buyers area. What will now be the next candle? You say you usually say you should not go against the trend. One. The second one is that you saw a strong buyer, that yes, this strong buyer from the buyers area is always strong, that buyers want to go more of two. And your analysis is just 50-50 with buyers and sellers. Don't ever take trade here. Let your analysis go with the most possibility in trading. If the sellers have the most possibility, go with sellers. If buyers have the most possibility, go with buyers. This is one of my secret sources in trading. I don't have any other secret sources than this. I go with the most possibility in trading. If my analysis is telling me that the buyers has the most possibility, I place a call. If my analysis tells me that the sellers are having most possibility, I place a put. But if my analysis is telling me that buyers and sellers are on the same level, I won't take trade there. I will just quit that trade or change the pair. So this is why this is one of the things you can control emotion. Don't take trade anyhow. Try to analyze the market and see to it yourself that you are 100% sure that the market will go in favor. Okay, that's all thing about controlling emotion. I repeat, don't stake too high. Don't fear. Don't fear. Don't fear. If you fear, you won't achieve anything. Don't stake too high. Don't be greedy in trading. Don't be greedy. Try to give chance for failure, but don't allow failure to overwhelm your success in trading. Don't allow failure, too much failure to overwhelm your success in trading. If you are having too much failure than success in trading, you should try to find something else or try to start from the scratch, from the beginning. Okay, so the next one is finding SNR. I think that is all about controlling and managing the emotions. Okay, standard problem. The next one is finding SNR levels. Okay, finding SNR levels. I think this is the major point. This is one of the major points. Now, when you're finding SNR levels, look at these markets. Look at this market. Here, we have some buyers. We have buyers here. We have buyers here. Let me draw the line. Here we have buyers. We have a levels. You can call it buyers. Like I said, that any turning point you see on the chart is not always buyers area or sellers area. It is where the market is expected where the buyers and sellers is expected to buy or sell the market. This is a level, not buyer's area. So if market should come to this level and the buyers enter, this is now buyer's area. That means this here is a buyer's area. All these points you are seeing here, and this is a level. So if market should come to this level and then reverse because of the level, not buyers. So the green candle that will form at that level is now that the buyers are now entering the market. Okay, like now we have buyers entry here, buyers entry there, or you call it a level. Here also we have buyers entry. We have buyers entry. Now we have first level, second level, third level, and the market is here. The market is going like this. The market is going like this, and stop here. Maybe you didn't know what will be the next time. The market stopped here. You saw this level, and you saw this one. So here we have the buyer's entry point, this level, this point here, and the next one is here, this turning point here. So and this, you saw this candle close exactly at that area with the rejection. Then you place a call. It is wrong in this type of situation to place a call. Number one is that try to, like I said, try to understand what the market is doing before you place your trade. In this type of situation, what you should see to it is that the market is not in a rangy market. This is not rangy market. This is a trendy market. How do you find out the market is a trendy market? Is when you're having high highs and high lows. Here we have high lows, higher highs, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Here also higher highs. Then you're not expecting the higher lows here. You should observe that the market is moving in this direction, not in this direction. The market is moving in this direction. Also, on the top side, the market is moving in this direction. So you shouldn't be expecting a buyer's entry here, because here, this is where you should expect a buyer's entry. Here, this area. If this candle will close here with a rejection, then you can place your trade with call option. But here, the market break that level. After breaking that level, your analysis tell you that the sellers are strong in breaking this level. Now, in breaking this level, do you see any opportunities or any chances that the buyers will enter the market? This is where you should expect the buyers to enter the market. This level. This is where you expect the buyers to enter the market. Not here. Because the market is moving like this. It's moving in this moment, in this direction. Not rangy market. This is a trendy market. In other words, we call it diagonal ranging market. Like this, the market is moving diagonal form, like this, like this, like this. Not the ranging market like this, sideways ranging market, not like this. It is when if the market is moving in a sideways like this, then you should consider if the market should approach this level with a rejection or confirmation, then you should consider it to be a call option, not like this. Try to understand what the market is doing. Don't just place your trade without observing what the market is doing. So here, I will not place a call option because I know what the market is doing. I know that the market is moving like this, not like this. Let's choose another pair. I'm trying to explain how to find. I'm trying to explain how to find levels. Here also, you saw this trendy market. You saw this trendy market, and you saw that the market is here. You are expecting the market to reverse this type of situation. Level is here. You saw that the level is here. You saw that the level is here because here we have so many turning points here, turning point. You saw that now this market approach that level. You are expecting to place a call option here, but what happens? The market will go against your prediction, which is wrong. Here, the market is moving like this. Look at it. The market is moving like this direction. It's a trending market, not a ranging market. The market is moving like this. Like this. So, okay, a minute, guys, for me. Okay, guys, like I was saying, the market is moving in a trendy move, not ranging move. Because here we have the lower high, the lower low, the lower high, the lower low. So the next lower low is here. So we're expecting that if the market should come to this lower low, that is by breaking this level here, this horizontal level, we should know that the buyers will enter the market because the market is moving in this range, moving like this, from lower low to lower high. So it is not a rangy market, it is a trendy market. And all these candles you are seeing on the chart, they are formed on a level. They are formed on a level. This green candle you are seeing here form on a level. This one also form on a level. This one also, they are forming on each level. And how are they forming on each level? Look at this green candle that formed here. If you try to observe where this week started from here. And then close here. So that is from here to here, the buyer's form. Try to go and check on the left side. You see that where this candle form is from a level. Each candlestick you are seeing there, they are formed from each level. Okay, trying to go back. Okay, I didn't see any. Okay, let me choose another pair. So I want to show you one thing about candlestick. That candlestick are forming from a level. This green candle you see here, from this point here, from this point to the body of this green candle, this one. If you go to the left side, you see that it comes from a level. Here you can see from this level, you can see bias entry, you can see the level. Here you can see rejection, the level. Here also the same thing, you can see the level. Here you can see bias entry, level. That means each candlestick, here you can see a resistance level. That means each candlestick you are seeing on the chart, they are formed from level. This candlestick you are seeing here also is formed from level. Let's check it. The wick and the body. So let's go back to check. You can see this is a resistance level. So that bullish candle is formed from this resistance level. Let's confirm it again. You can see it formed from this level, formed from this rejection time. And this level also is formed from there. This one also, this one also. So it means that each candlestick that you are seeing on this chart, they are forming from level. Now, you should not be taking trades on any level on the chart. You should know that at this point, at this level, you should expect either a bullish candle to form. That's why you didn't, so many traders didn't know the psychology behind level. They always think level market form on each level, but they don't understand how the market will form that level. Like this level now, this bearish candle you are seeing here, all these bearish candles, they are formed from this level. This is a level. So all these bearish candles you are seeing here, they are formed inside that level. And if they should go outside the level, that means the buyers will take over. So this level here is now a seller's area. So anytime you see a red candle forming this area, the next candle will be red because this is where the bearish candle is forming. Here also, this is a seller's area. This is a level what? Level 2. This is a level. There you can see there are so many levels. So anywhere this bearish candle is formed, if you go outside the level, that means the buyers will enter the market. If you go outside, so each candlestick are forming from levels. This week you are seeing here is formed from levels. This candle you are seeing here is formed from levels. Even a momentum that you are surprised that a candlestick doesn't obey any level and they form a momentum like this. Each candlestick is forming at each level. Maybe this candle stop at a level, but instead of forming a green, it closes as a red. That means that level is being dominated by sellers. So the seller that owns that level. So if now buyers should come to that level in the future, then the buyers will give respect to that level because it was supposed to be a buyer's entry, not seller. Supposed to be a buyer's entry, not seller. So now the seller's entry, the sellers entered. That means from this level, the buyers also will give respect to the sellers. Okay. So each candlestick that form are formed from the level. How do you find level on your chart? Say for example, if you see the market, let's say the market is here, this green candle, and you check on the left side, you didn't see any level. So it is better to go far to check level, find the level very well. Here we have a support level, and we have a resistance level. What I mean by support level is that this red candle form close and the buyer center. What I mean by resistance level is that this bullish candle close and form a red candle. So this is a resistance level and this is a support level. So in the future, you will check if the candle will close at this level. Let's see. Okay, I think somewhere right here. Now you can see that this candle closed at that level. And which level does this candle close? It closed at the support level. That means this support level contains buyer's entry. That means the buyers contains seller's entry. That means the sellers are on that level. So the buyers should come to that level, the sellers will enter. So it means that from this level, the sellers are dominating the market. The sellers are dominating the market. If you see that in the future, the buyers still try to come to that level, it's still reverse. So when you are trading on levels, look at the current price market. You saw this current price market. Quickly go to where you see a strong level or a level. Here we have a level here, and here also we have a level. So these are resistance levels. Go back again, check whether you can find any support level. Here we have a support level. Here also we have a support level. This one. You should know that the market is bouncing from this support level to this support level. So I'm telling you the mind. So I'm telling you what is on my mind, what I'm thinking when I'm placing my trade on level. I know that the market is bouncing from this level to this level, the support level here and this support level. So the market is bouncing from this support level just to find out or just to bring up any candlestick. Is it bullish candle or bias or bearish candle? Like now, you can see this dot line you are seeing here, this dot line. I think you saw it clearly. You saw it, just let me know. You can see this dot line you are seeing here, this dot line. This is where the price is actually is. Now you can see that the market is going up. That means you should check where the level, where the market is bouncing. I think the market is bouncing on this level. The market is bouncing on this level. Check again. If the market is coming lower. You can see it's bouncing from this level to this level. Check again if you see any level. I think this level. That means the market is bouncing from this level of resistance and this level also of resistance. Go back to the chart and see what the market is. You can see it's bouncing on that same level. Now, if the market should break it, quickly go and check it again. Why the market should break it? Here we also have another support level. Here we have support level, resistance level. That means the market is bouncing on this strong level. So this level we are seeing where you see so many reversals, it means that this is a strong level. This is a strong level, strong reversal area. If you try to zoom out like this, check all the strong turning points. Check all the strong turning points. For here, take for example, we have a turning point here. You have a turning point. If your eyes is clear, you can see clearly. We have a turning point here, and we have another turning point. That means the turning point is that the market reverses here, and here also the market reverses upside. Here also the market reverses. 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 That means that if buyers should come to this level here, this level, the buyers will also reverse. Or if sellers will come to this same level, the sellers will reverse. This is how to find a strong level. And another method of finding strong level is what I just done, what I just do now. You saw this price here forming a red candle. Quickly zoom out. Choose the level, the turning point, the strong turning point, where the market reverses multiple times. Like here, this is a turning point. Reverse. Reverse, reverse, it reverse, it reverse, it reverse, reverse, here also it reverse. So this means that this is a strong level, a strong SNR area, a strong reversal area. Check the candle, what this candle is doing at that level. You can see that the buyers are now interested in the market because already you can see confirmation that the buyers already entered from this level. So the buyers are now interested in the market. It means that this level, this turning point level, is a strong level, a strong level, a strong support, a strong SNR level, a strong reversal area. So when you are trading, you should always check the levels. Now, what if you have situation like this one, that when you check on the left side, you didn't see any level until you go back. And in doing this, I will advise you not to do that. If you are checking levels and you didn't see any levels, don't go back. Take for example, you saw this bearish candle here. You saw this bearish candle, and you check on the left side. Maybe you draw your line on that bearish candle. Maybe the actual price is here. The actual price is here, and you go back. You can just scrolling back, but you didn't see the level. You didn't find the level. And you saw the markets like this. This is what usually happens on OTC market. You saw it like this. Don't fight back. Don't say you want because you didn't see any level. You want to place. Only professional trader can do that. by taking risks. Don't say because the level, you didn't say any level, you want to place your trade. Don't do that. Try to skip this place. Try to look for another possible level where you expected the market to reverse. If another possible level is here, somewhere here, you check on the left side and you see that level, you can place your trade. You can decide if the market will reverse at that level or it will break. For example, now the market is now like this, and you saw this bullish candle close here with a rejection. This bullish candle close here with a rejection. You check on the left side. You saw that the most possible of reversal is here, and this one also. This one and this one. That means you are saying the possible of reversal, yes, it is right. You are expecting the market to reverse at this point and at this point. That means if buyer should come to this level, then you will now look at this trend that, okay, yes, we have a downtrend and the market is at this level and it closed at this level with a rejection. That means I have the possibility, the more possibility of going sellers. And what happened? This candle cross that level. Crossing that level, you check again, you didn't see any level. Check again, you didn't find any level. Just go back, you didn't see any level. And you want to decide or you want to place your trade. Okay, where am I? Okay, yeah. And you want to place your trade. Okay, live in complete trade, in complete mode. It's just that the time and the explanation. The time and the explanation. If I should trade as if the way I'm trading, you might not understand it. So it is better to understand why I took trade. If the market is uptrend like this, okay, like this, what I said, this is the, let me show you. So we'll be treating them one by one. Finding SNR level, that is the first thing I'm doing. Finding SNR level and how to analyze and find the next candlestick. We are coming to that. So if I should doing that all the time, you won't understand. So it's better you focus on what you are doing or what you are saying now. How to find them. Most people don't know how to find them. Most traders don't know how to find them. Like now, we have so many levels. You might be wondering, where should you place your trade? I will upload a video on one trade I took some days ago that I saw still on noticing market. I saw so many levels like this, but I didn't choose any of these levels. I go back again. I even went back to the last level somewhere here to pick a level because I saw so many levels here. You might be wondering why I didn't choose any of these levels. Like I said, that trading candlestick or trading while you are trading, you shouldn't choose a market that has so many levels. I'll go back again and choose this level. I know that there is a strong level, this and that separate level. So I will not choose any of these levels I'm seeing on the chart. So when you're taking trade, you should not just, like I said, that you should not just be drawing so many lines. You should not just be drawing so many lines. This will also distract your attention. You will not focus on the candlestick language, or you'll be focusing on the line that if the market should come to that level, reverse. Market should come to that level, reverse. Say, for example, you place all your lines here, which you expected the market to reverse at each level, but you don't understand what the market is doing. You can see this market approach this level, but it didn't reverse. What do you observe? You see that the market is going up, strong buyer sentiment, rejection. So why do you expect the market to reverse at this time? It shouldn't reverse. So in this kind of situation, you should only choose one level, this kind of situation, which can give you short trade. Yeah. I think that is how to find level. Let me show you the next one. The next one. The next one is how to analyze and find the next candlestick. How to analyze and find the next candlestick. Okay, when you're analyzing the candlestick, I will also test you guys on your abilities of finding the next candlestick. When you're analyzing the candlestick, you saw a bullish candle forming. Here we have a level. You know that this is a level because the market reversed here. Place your line. It's level. Now you look at the trend. What do you observe? Trend, minor uptrend. You observe the uptrend. Previously, the trend is not proper because you are having a downtrend here, uptrend here, downtrend. So when you see this kind of situation, you should go and choose the recent trend. We have a downtrend here, and we have a minor trend. And you saw that this bullish candle is forming. This is next level that we expected the market to reverse. And here also, this is another level where you expect the market to reverse here. And you saw so many levels here. And this candle close at that level. Now, your analysis should be network. Your analysis should go with the most possibilities in trading. Yes, we have uptrend. We get that. We have uptrend. This is uptrend. One. And this is a level. This is a level. That is for sellers. Let's say for buyers, let me indicate it as B. Buyers, we have one reason to go with buyers, one. And for sellers, let's indicate that as S. For sellers, this is a level. You have one reason to go with sellers, two. And one reason to go with sellers. Now, you analyze it again. This bullish candle that formed, where does it close? It closed somewhere here. It closed at this area with a what? With a rejection. So it closed at this area. It didn't close at that level. That means the buyers are having two reasons. Now for the sellers, if you want to go with sellers, the sellers has one reason. The second reason that it got rejection from this area, from this level. The sellers rejected the market from this level. So the sellers have two reasons now. Now check where this candle closed. This candle didn't close at this level. The buyers already have three reasons. But yet the body is still far from the level. The buyers has three reasons. Now the sellers has two reasons to place put option. The level and rejection to place put option. Now the buyers have three reasons to place call option. Uptrend, bullish candle, it broke the first level, and the body is still far from the level with a new high. That means either you have four reasons or three reasons. That means we should now go with buyers at this time. Go with buyers, the most possibility. Go with buyers at this time. Say, for example, look at this. Let me explain again. Because in trading, you have to be going with most possibilities before you place your trade. Here we have a strong buyer's movement. And where is the next possibility of reversal? Check on the left side. Do you see any possibility of reversal? Think where the market, you check where the market closed and where the market got rejected. You know that the market got rejected from this level. So where this market closed, check on the left side. Check on the left side. So I didn't see if there's a level here. I think this one. Okay, the market is a little bit higher. Check on the left side. This one, I think this level. This one right here. Check where the candle closed. You can see the candle closed exactly at that level. That means, number one, if you want to go with buyers, you have the trend. One reason for buyers. Two reasons is that I think there's no other reason again to go with buyers, only with the trend. Okay, the second reason is the momentum, the buyer's momentum. That is two reasons. Now, if you want to go with sellers, that means you only have two reasons to go with buyers at this time. If you want to go with sellers, number one, this is a seller's area. the candle got rejected from seller's area. One reason. This is a reversal candlestick. Like I told you, inverted hammer. It closed at that level, at a strong level. Let's do it one by one. It rejected from this area. One reason. There's a strong level here, which I saw on the left side. Two reasons. This is a reversal candlestick. It closed at that level. Three reasons. Here we can see some strong seller's entry. Here, four reasons. So I have four reasons to go with sellers, and I have two reasons to go with buyers. So it is for me to go with sellers here than for me to go with buyers. Because the two reasons I have for buyers is one, the trend, two, the bullish momentum. That is the only two reasons. Here I have so many reasons to go with sellers. Level, rejection, reversal candlestick, and a seller's movement. So that is why it's one of the secrets of me taking trade while you are trading, or when I'm trading, because I always go with the most possibility. Then if I now find a situation that the buyers and sellers are on the same level, I will not take trade then. Maybe here I have three possibilities of going with buyers and three possibilities of going with sellers. I will not take trade in this market, this type of market. I will not take trade. I would rather quit it or change the pair. So now, let's see. Let's start analyzing the candlestick. Network problem. Okay. Here we have a bullish candle. We have a bullish candle. The trend is uptrend. One, bullish engulfing. Bullish engulfing pattern. The trend is uptrend. Two, where is the next possible reversal? This level. So we have uptrend, one reason, bullish engulfing, two reasons to go with buyers. Now for sellers, we have level here. We have some strong sellers entry from that level, because here we have a strong sellers entry here. Here also we have a strong sellers entry. And here also we have a strong sellers entry, That means one, for sellers, level. Two, for sellers is rejection at that level. And three, for sellers is the reversal candlestick. Like I told you, that strong candle is a reversal candlestick. If any strong candle appears at the level, it's a reversal. Okay, how do I arrive at the level, latest level? Is where I told you that any turning point that you see on the chart is a level. Any turning point that you see on the chart is a level. So it is now for you to say the buyers are waiting or the sellers are waiting. For example, I saw that this is a next level which I expected the buyers to do. But I now check again that I have already seen some levels here. So why should I be going for buyers again? That means my mind will not tell me that I have the most possibility of going with sellers. Here the trend is downtrend for sellers. One, this is a level. That is, I'm expecting that if buyers should reach this level, the sellers should enter. That is two reasons. Number three reason, rejection from that level. That means there are some sellers entry at this level. If you check that on 5-second chart, you will see this rejection at sellers entry. You can see some sellers entry. So I have three reasons now for going with buyers and for going with sellers. Number one, level. Number two, rejection from that level. Number three, strong sellers entry from that same level. That is three reasons. Now for buyers, uptrend. One, bullish engulfing. So I have two reasons. That means these two reasons I have with buyers and three reasons I have with sellers. So it is better for me to go with sellers, not buyers. So always go with the most possibilities in trading. While you are trading, always go with the most possibilities. This can give you winning ratio. Like now, if I should place my trade here, I think I'm very late here. Okay. I have possibility of going with buyers here. Number one, uptrend. Number 2, strong buying pressures. Number 3, strong candle. Number 4, come, let me zoom out very well. I want to show you something I observed here. Number 4, the level is here. Okay, let me start again. For buyers, the trend is up. Again, I saw a strong rejection, a buying pressure here in this candle. That is 2 reasons. The first reason is uptrend. 2 reasons is I saw a strong candle. 3 reasons is that I saw the candle that closed lastly is very strong. And where it closed, the next level is here, which I expected the market to reverse at this level. So I have 3 reasons. Second one is that the rejection is not enough. The rejection. And I always tell you that you should observe the rejection. Even a small rejection can change the market movement. For me, I don't know. Even a small rejection can change the market movement. Yeah, let me explain again. The trend is up. One reason. A strong buyer's rejection, buying pressure in the previous candles from this level. 2 reasons. The last candle that closed also is a strong candle. The rejection is not enough because here I can see a strong rejection here, but here I'm seeing a small, very small rejection. And with a buying pressure, I have 3 reasons. The next level, which I expected the market to reverse, is here. So I have 4 reasons. So if I should go with sellers, I only have 1 reason, rejection, small rejection. That is, I have 2 reasons to go with sellers. So why should I place a put option? I shouldn't place a put option because here the trend is down for sellers. Number 2, if the candle closed here, it didn't close at that level. So I will look for another thing where I can say the sellers are also active in the market. It is rejection. Number 1, the trend is down. Number 2, this rejection. Or you can say lower rejection also because these are some sellers activities. But still the buyers reject the market. So rejection, 2 reasons for going with sellers. So I will not go with sellers at this time. I will go with buyers because I have trend, rejections, buying pressure, rejection again, strong candle. The rejection is not enough and next level is here. So I will place a call option with confidence. So always go with the most possibility while you are trading. Okay, gap up, gap down. This is one of the major strategies in trading. And gap up, gap down usually is common in OTC markets. But OTC market loves doing that. You can see this gap in the market chart and all. You can see this gap between this bullish and this bullish. This gap tells you that the sellers are active here. There is a hidden sellers entry in this gap. There's a hidden sellers entry in this gap. It means that why is it so that the sellers couldn't appear in this gap is that there's a strong force of buyers to push the price higher. Strong force of buyers. You can see that when I place my trade here, the market, because of this level, that means the sellers are present at this level. So the sellers try to go a little bit down. But on reaching this level, the buyers reject. It means that as I'm seeing some rejection here, it's telling me that the buyers are in full power to push the price higher. You can see that when the price goes here, the buyers couldn't give chance for the sellers to come in. They just jump to this level because this level, this gap you're seeing, there are some hidden sellers entry. Check on other broker, you will see a bearish candle here. Most of the time, if you check that on 5 seconds, you will see some bearish candle on 5 seconds. bearish candle here. So this bearish candle is telling you that the sellers are there, but the buyers doesn't want to give chance for the sellers. There is a strong force from buyers. That means all these things you need to observe them in the market. Strong force of buyers and sellers in the market, strong momentum, the power of buyers, the strong momentum, the strong trend, the weakness and the sellers of the weakness of buyers and sellers in the market. Here, the buyers are more powerful because of this gap. The buyers try. That means at any time if the market should come to this level, the sellers will now feel happy to enter the market because here they try to enter the market because of this strong force of buyers and sellers, and because of this strong force of buyers, they couldn't enter this market. So at any point of the time, if the sellers will come to this level, the buyers will not enter. Why? Because the sellers are already here. The buyers couldn't give chance for them to enter the market. So they will not feel happy to come to this level and then continue going down. So buyers will not interrupt their movement here. You should try to understand what the market is doing. Buyers will not interrupt. It's just like when you have power over somebody and you don't allow others to have chance over you, to overpower you. By the time they will come back, you know that they will come back with a full force. And if they should come back with a full force, you that you have already exhausted your power here in this time, you should know that when they will come back in a full force, you should always give chance for them. That when they approach this level, you should give chance for them because already you will stop them from going, from entering the market. Now they will come back with a full force.
I have questions, sir.
Okay, question?
Hello.
Okay, go ahead.
How will I know that, especially this red candle is coming down, the next candle should be red again,
This candle,
or the next candle will be green. Sometimes the next candle will be red, sometimes the next candle will be green. So how do I know?
is your analysis.
How do I analyze that market?
You want to analyze this market? Okay, let's go.
After I want to trade either put option or call option. So how do I analyze this market?
Let me check this message. Okay. When you want to analyze the market, you can see a red candle here. Go to the left side. Because already you have one reason to place a call option, the trend and the rejection. Now go to the left side. The left side, we have so many levels here. This level. This level. Here also we have some levels here. Next possible of the class is here. We have some levels here. So check again if that level is very strong. Here you can see that there's a turning point here. I think one turning point. So I don't think so. Now, you now saw that this candle approached that level. You can see it's still far from the level. That means the analysis is not correct because here we are analyzing where the candle closed. You can see that when this candle reached this level, it was rejected. So this candle closed here. You should know that one reason you are going with buyers is number one, strong buyers movement, rejection from buyers. And the next level, I think strong buyers movement, rejection from buyers. That is the reason you should go with buyers. Now for sellers, major trend is down. Strong bullish candle, bullish and strong bearish candle, bearish engulfing pattern. Two reasons. No upper rejection. Three reasons. New low. The body is still far from the buyer's entry point. Four reasons. So that means we are going with sellers with four reasons. With buyers, we only have strong buyer's entry, rejection from buyers here. Rejection. Only I think only that two reasons. Because we check on the left side, you will see a proper level. There's no proper level here. You can see here we have a turning point here. From this downtrend. Because previously this is sellers area. I think only that one. and still the candle is still far from that area. That means we didn't have any possibility to go with buyers. So when you are doing this, do it within 1 minute. That means the possibility of going with buyers is one, the bullish momentum and the rejection, and there's no level where this candle close. Where this candle close here, there's no level. So we only have two reasons. Now for put option is one, the trend, two, a strong candle, a bearish engulfing, three, no upper rejection. No upper rejection is that I'm coming that on this rejection. That is how to read candlestick. No upper rejection. You can see the buyers enter from here, close here, close here. So the buyers supposed to go more up to tell you that the buyers are more powerful here, but the buyers couldn't enter, couldn't go up. That means the buyers are not interested here. That means there's no upper rejection. And again, the candle, the closing price of the candle is still far from the rejection point. That means we have more possibility of going with sellers on the next candle. Like now, we are seeing a strong bearish candle. We are seeing a strong bearish candle. You see where it got rejected? This level. It got rejected from this level. Here we have a buyer's movement. It got rejected from this level and it broke this buyer's area. And if a candle broke area, a buyer's area or seller's area, there's more possibility that the market will reverse. So number one, you have buyer's movement, rejection from buyers, and it broke this buyer's area. Now for sellers, we have, okay, we didn't have any level for buyers. I think, let me see if we can have any level for buyers here. Okay, this one, this level, this level. So here we have one, buyers movement, one reason, rejection from buyers, two reason, and it closed at it broke the buyer's entry point, three reason, and it closed at this strong level on the left side, which we have confirmed on the left side. Those are this level. How many reasons? That is four reasons. Now for sellers, one, strong downtrend. Again, a strong downtrend. Again, there's no upper rejection, three reasons. Again, it broke this level, four reasons. So we have four reasons with buyers and four reasons with sellers. It's better not to take trade in this type of market situation. In this type of market situation, the candle will either go up or go down. You never know. Or the candle will close as a doji. You don't know that. So you should not take trade. We have again, let me analyze again. Buyers movement, one. Rejection from buyers, two. There's a strong level, three. It broke this buyers area because there is more possibility of going with buyers. Four reasons of going with buyers. Then for sellers, one, the major trend is downtrend. One, we have a minor downtrend. Two, we have there's no upper rejection. Three, and it broke this buyers area because there's more possibility that the buyers will enter the market after breakout or the sellers will continue the market after breakout. So we have four reasons for buyers and four reasons for sellers. Don't place your trade. If you should abide with this rule, you can become profitable in the market. Don't place your trade. Try to give gap. Try to find out the most possibility in the market to place your trade. If you are planning to have 10 trades per day, trying to find out the most out of the 10 trades per day, and you see that for the whole day you only see a good market whereby you are place your trade according to the more possibility in the market, and out of this 10 trades you see 5 possibilities of placing your trade. That means that one is enough because the market will not always give you ITM, it will always give you OTM most of the time. So you have four reasons for going with buyers, four reasons for going with sellers. Don't place your trade. And another thing you need to consider, if you want to take risk in this type of situation, try to reanalyze the candlestick again, the market again. Uptrend, one, rejection for buyers 2, there's a level 3, it broke the buyer's area 4. For sellers, major downtrend 1, minor downtrend 2, no upper rejection 3, it broke this level 4, and you can see that let's say network internet measure, and you can see that it broke this level slightly. So we have 5 reasons. So if you want to take risk in this kind of market, you can go with sellers, but not buyers. Not buyers. Because I don't have any more possibility. That's why I say that when you are taking trade, you should consider the minor trend than the major trend. Here in this kind of situation, we have major trend for buyers here. We have the minor trend. Also, if you have the major trend for sellers here, also we have the minor trend. Here also we have the major trend for buyers. Now the buyers are forming minor trend. That means your analysis to base on this minor trend. As far as you have gotten your major trend like this, your analysis should base on this buyer's minor trend. What is the buyer doing? It means that the buyers are still trying to go more up. And here, the candle closed with a strong candle. What is it telling you? It means that the buyers are now strong in the market. Now, for the sellers, check. Is the sellers also are in power? Yes, they're in power because there is a level here. 1, the candle got rejected from that level. 2, downtrend for sellers. 3, major downtrend for sellers. 4, a strong candle, a sign of reversal. 5. So that's why we are seeing. Okay, I'm coming. I think we have done that before. How to differentiate between major and minor trends. You can see we have so many trends on the market. Don't get confused. Let me show you. We have so many trends on the market. Here we have uptrend. And if you zoom in, we have minor trend. For the sellers, we have downtrend, the major downtrend. And if you zoom in, for the sellers, we also have the minor downtrend. Now, if you want to take one trend for each order, that means you should consider this trend as the major, while this one is as the minor. Then, if you want to consider it as a buyer's power to continue the market, you should consider this trend for the buyers as the major and this one as the minor. But if you are taking trend 1-1, that's why the trend is very much important. If you understand the trend, then you can place your trade confidence. If you are taking the trend 1-1, consider this as the major trend and this one as the minor trend. All these trends you are seeing, they are called mega trend, mega major trend, or mega minor trend. These are just the normal trend. Like now, if I want to choose this trend, I will say this is uptrend. This is major uptrend. This is minor uptrend. But if I see possibility that the sellers are in power, I will not choose this as the major downtrend and this as the minor downtrend. But I here see that the buyers are now in power. Major uptrend, minor uptrend. That is what I will choose. So this is the difference between major and minor. The major will tell you that the market already in the past, the sellers, let's say the major trend is down, that already in the past the sellers are in power. Now the minor trend is up. That means at this time, the buyers are now forming their own trend. Here, the buyers are in power, but on reaching this level, the sellers enter to this level. Now, the sellers finish their trend because this market reverse, if you check, market reverse in the middle of the trend. Check. Reverse somewhere. Middle of the trend. This one. Middle of the trend. This one. So it reverse in the middle of the trend. It means that the buyers are going up. And look at this pattern. The pattern is forming like this. That's why you always see me saying continuous uptrend or continuous downtrend because of how the market is forming. Look at this. What I mean by continuous uptrend is that the market is moving like this. Up, higher high, from higher low to higher high, higher low, higher high, higher low, higher high, higher low, higher high. That means this is a continuous uptrend. That means the market is moving higher high, higher lows, higher high, higher lows, higher high, higher lows. Now, if the buyers couldn't be able to make higher highs, maybe the market start forming higher and lower highs. That means so maybe the market start forming lower highs. That means the sellers are now in power. And this is how the sellers will be moving, like this, from lower high to lower low, lower high, lower low, lower high, lower low, lower high, lower low. That means this is a continuous downtrend. The market is moving in a continuous downtrend. Now, if the sellers couldn't make a lower high and the buyers try to make a higher low, that means the buyers will start, the trend of buyers will start. Higher highs, higher low, higher highs, higher low, higher highs, higher low. So this is a continuous uptrend. Why this one is a continuous downtrend? So in this kind of situation, you should consider the market structure. The market is moving like this, not in a ranging form, a ranging area. So when you're analyzing the market, try to check what the market is doing. Like now, you can see that the market is trying to form a bearish candle. It means that the market has attained their highest point, which is right here, like here. The market is moving like this. Market is moving like this, higher from higher low to higher high, higher low, higher high, higher low, higher high, higher low, then higher high. So the buyers are attaining their higher highs. It means that if the market should come at any point of level and they create a stop at this level without reaching this level, without reaching this highest point, it means that the sellers will now form their own trend. So it means that the trend of buyers stop here. The trend of buyers stop here, while the sellers are now in power to continue the market. So in this kind of situation, that's why I say the golden rules in trading is when you are buying low and when you are selling high. For example, you saw this higher high like this. You should sell at this point, higher low, from this higher high. Then the price is here, this higher low. You should buy from this point, this higher low. The next higher point is here. Sell from this point, buy here. Sell, buy, sell, buy. So this is the time that you are following the market structure, buying low and selling high. So you follow what the market is doing before you place your trade. Try to understand what the market is doing, and let your analysis based on most possibilities before taking your trade. Again, if you want to analyze this candle, this is uptrend. One, this is a level here, and there's a level here also. There's a level here, and here also. So it is either you place your trade either at the body of the candle or the wick, anywhere you think that, because even here, even where I place this line, if you check in the past, you will see that market also reversed there. You can see the market reversed, Even the body where I placed the second line, which is somewhere here, the market also reversed. So you can see it reversed here, it reversed. So it is doesn't matter if you place your line either at the wick of the candle or the body of the candle. Now, if you want to analyze the market, number one, we have uptrend for buyers. One, strong bullish candle for buyers. Two, think that is the most possibility. Uptrend. One, again, strong bullish candle. Two, most possibility for buyers, to go with buyers. Now for sellers, we have a major downtrend. One, a rejection from this level. I think there's a rejection. Let me check. I see a very small rejection. That means number one, we have major trend for sellers. One, major possibility for sellers, the trend, one major trend. Two, there's a level here, level, and at this level, I saw a rejection from sellers. Now we have one reason, two reasons. Again, coming for this internet function. Okay, again, a strong bullish candle, a sign of reversal. So we have three reasons to go with sellers. For buyers, we have the major trend is up, the trend is up. We have a strong candle and a bullish engulfing. That is the most possible to go with buyers. So we have one and two reasons for buyers. While we have three reasons for sellers. That means we are going with sellers on the next candle because the trend is downtrend. One, a rejection from this SNR level. Two, and a strong candle, a sign of reversal. Three. Here also, for buyers, we have the trend is up. One, a strong bullish candle, bullish engulfing. Two. So I don't see any more possibility. But if the buyer should break this level, yes, you are right. You are right. I think you are getting it. Okay, if this bullish candle should close at this level, close somewhere here. This bullish candle close at this level here on the left side, which is there's no level on the left side, and this bullish candle close here without rejection. Listen very well. If this bullish candle close on they are above this level here somewhere here without rejection, that means you have the more possibility of going with buyers. One, uptrend. Two, strong candle, bullish engulfing. Three, it broke this level, previous level. Four, there's no rejection. That means you have four reasons. Then for sellers, you only have the trend is down, the trend is down, and a strong candle, a reversal candlestick. You only have two reasons. So you should not place a put option here if you have two reasons for sellers. But here we have three reasons for sellers. That's why the next candle was spread. Three reasons. So, and even this candle finish at the sellers area, because the sellers area, you can see this rejection here. The sellers are present here. This candle close at that area. The sellers enter, and a strong rejection from sellers. So this is strong sellers area. Candle close at that sellers area with a rejection. So we have more possibility of going with sellers on the next candle. Now, if you try this all the time, you take one trade with more possibility and you want the trade, give yourself a time. This is how I was able to improve by visiting the next candlestick step by step, each candlestick rapidly. Because once I see that I take the trade and want the trade, I'll give myself some time. I stop. Then I'll look again on the chart. If I see more possibility, I'll just take trade. I'll stop. So I practice this all the time till I now become a professional in that I can trade with confidence, even though I saw more possibilities, or even though without even checking this, without even checking all these more possibilities, I will just check it. My mind will just quickly calculate everything at once. The trend, uptrend, minor trend, bias area, level, then I'll just place my trade. Because I already practice it and I know the most possibility. And I think maybe it's that way, I don't know. Maybe it's the same way that Saibinita is also trading, but I don't know if it's the same way. I haven't attend his class, so I don't know. Maybe he told some of his students. Because I always observe his trading is the same rules he follow, going with the most possibility. And that is the most secret for successful traders to be, going with the most possibility. That is how to analyze candlestick. Now, how to analyze candlestick whips. Like I said, there's a question here, a group chat. Looking for the question, which I said to remember me. Chat. there's two questions. Okay, something this one. That in this type of situation, I place a put option on the next candle, and here I place a call option on the next candle, and both patterns are the same. Both market are on the same pattern. That is the trend is downtrend, and here the trend also is downtrend. But I place a call option, and here I place a put option. Let me try to explain that on live chat. Yes, in most of the time, when you see a market like this, here I place the first trade was that I placed a call option after I saw a red candle like this and it went up like this, and the trend is downtrend. Then I place a call option the next time. Then the next time I see trade again, I place a put option. So the reason there is that why I place a put option on the next time, you can see that, let's say for example, the first picture is something like this, which the trend is downtrend, and here the first one I place a put option on the next time. Now again, the same market, the next second picture is like this. The trend is like this. Here the bearish candle close here. Then I place a call option on the next candle. In this type of situation, the market structure is the same. The pattern is the same, but the psychology behind the market is not the same. I told you that yes, we consider the wicks as one of the major things in trading. Here, why I placed the first trade was the one I placed a call option. That is the first trade I took. Why the second one was the one I placed a put option. That is maybe 3 days after when I saw the same thing. My mind quickly reversed to me that I saw this pattern before. So I quickly go through it on my mind that this pattern is the same but different psychology, different logic. Okay. The first one was the one I placed, the first trade I took, I remember, was the one I placed a call option, followed by the second pattern, which I placed a put option. Why I placed a call option on the next candle is that once I see that here, the candle that closed as a bullish candle here didn't have lower rejection. It didn't have lower rejection. Why the second trade was that if the candle that bullish candle that closed, the last bullish candle that closed has a lower rejection. So this tells me that the market are not the same, but the this pattern are the same. The first one, the bullish candle that closed didn't have lower rejection. While the second one, the bullish candle that closed has a lower rejection. Now let me explain how this rejection matters most on the chart. Look at here. There's a rejection on this candle. Here. The buyer tried to go up. Okay, let me try to zoom so that you can see. Yeah, the buyers tried to go more up, but rejected from sellers. So the sellers are and they can't close. So the buyers try to enter the market. You can see that the sellers reject the market. So and there's a gap to this level. It's just like when you are playing a puzzle game. You can see that this gap you are seeing here is a sign that the sellers are active in the market. The sellers reject the market, then this line, this gap you are seeing there, the sellers try to close. You can see that when this bullish candle close, when this bullish candle close, the next candle supposed to be green, but the sellers try, the candle open from here, the sellers try to go down because already they have the power to push the price lower here. So the sellers close here, the candle close here, the sellers try to go down, creating this lower wick, but rejected from buyers. So the buyers are here. And this candle close as a red with a rejection from seller. So it means that the next candle was red. Now, and this candle that closed at that area is trying to connect the seller's activities here. The seller's activities. The seller's activities is here that rejection from here, the candle close, the sellers try to go down. it means that there are some sellers activity, there are some sellers eating sellers here. Now this bearish candle closed at that same level. It means that it will try to connect the hidden sellers to form a bearish. When I observe this, I just place a put option immediately, because when I see this lower rejection and this last bullish, the previous bullish also got the upper rejection. So I knew that the sellers try to go down like this, and this candle close here. So the next candle will be a bearish. But the one I place a call option here, show you. The one I placed a call option here was because here the last bullish candle that closed doesn't have lower rejection. No sellers activities here. It only got rejection from here. So the buyers enter. The buyers quickly enter the market. They didn't give chance for the sellers to come up, to come down. So the buyers quickly enter the market. So, and the sellers, because of sellers area here, the sellers try to enter. But when I check it that there's no lower rejection here, so why should I place put option? Because there's no sellers activity here to connect to this level. So I just place a call option. That's why I place a call option. Once I see that, once I say observing the wicks here, you can see here there's a upper rejection here. There's another possibility of going with sellers here. There's an upper rejection here, and this candle close here. The sellers. So buyers couldn't try to go more up. That means there's no buyer. The buyers are not strong enough to go more up here. Instead, the buyers are not enough to go more up. Let me draw it very well. There's a rejection here. The candle closed here. The buyers couldn't try to even go more up, but instead the sellers enter the market firstly. That means the sellers here try to connect here and then go down here. It means that from here to this level, there are some sellers activities here. That is why we are seeing the next candle form a bearish candle. This is another reason why this candle was a bearish candle. The first reason was, and maybe our analysis is that the sellers are more have more possibility of going with sellers. And the second reason is that because of the activity here, where the sellers are connected, and here also the sellers also are connected, no upper rejection. If there is upper rejection here, the next candle is supposed to be a bullish here. The next candle is supposed to be a bullish. Even though our possibility tells us to go with sellers, the next candle is supposed to be a bullish, because this is the most priority, this is the most important thing in the market, the wicks. So if there's a wick here, it means that the buyers also try to go more up, but rejected from sellers. It means that the sellers are active here, not here, not at this time here. So the sellers, the buyers couldn't enter the market, whereby this candle closed without upper rejection, meaning that the sellers connected here. So there's a puzzle gap here where the sellers will be connected, and this candle closed here. That means the next candle will be bearish. That's why this candle form a bearish most of the time. And another logic is that if there is no upper rejection here, if there is no upper rejection in this bullish candle, that means the next candle will be this candle. Next candle here will be bullish if there is no upper rejection. If there's no upper rejection in this bullish candle and there's no upper rejection in this bearish candle, the next candle that will come here will be bullish. Because why? There's no strong buyer to go more up, and yet there's no strong sellers to even reject the buyers to go more up, and the sellers reject. No, that means the buyers and sellers are on the same level, and the candle close like this. The next candle is supposed to be. So for you not to be confused, if you are trading, you should observe the wicks also and try to understand what the market is doing. Wicks. Okay, I think I should give chance for questions and answers now. You can pick up the question. Let me almost everyone. You can pick up the question which you want to ask. Maybe from the group chat. Okay, everybody is allowed to talk now, to speak, to ask any question. And I'm going to test you guys some analysis. Okay, I think I should start from the first person. Yeah. One person. Okay, Miranda, I think you are the first person. So just ask any question. So let us do it quick because of the test I want to give you guys. Okay, you are free to ask any question. Now, if you have any question, you are free to ask any question.
Hello.
Okay.
When I'm drawing these levels, when I draw a level resistance, can I use it as a support? Is it very reliable to use a resistance as a support?
Yeah, you can draw it on the line. Let me see. You can draw it here. And you can. Are you talking about this? Okay, try to draw it on the chart. Let me see what you are saying. Let me understand what you are saying. You can draw it.
I was asking
Okay.
if it is reliable to use a level.
Which level are you,
yeah?
level are you talking about?
To use a resistance as
This
yes?
resistance.
Like that one, yes. Like that one, yeah.
Yes, it's very reliable if your possibility is if your analysis is with the most possibilities. You can use any level of the chart. You can use any level. Even though you don't want to use this one, you can go to the left side to use levels. Because yeah, you are seeing you are seeing a level here. And you are seeing that the market is trying to go more up from this level. Maybe it goes here. And you are saying that the market goes this level. You might see that after this level, there might be some upper level. If the market is respecting this level also, you can see this level and this one. So when you are trading, you should always go with one level and compare and try to find out if the market is respecting the level so many times. Now you can see this bullish candle here, maybe above this line, and you say maybe you cross this line and get the bottom. But instead, you didn't know that there's a level. So using one level is not that reliable, but you must confirm it first. Because here, once I see this level, if I will be the one that will place my trade, I will not choose this level. I don't always choose the first level here. I will go back to the left side. I will upload the video where I trade that kind of trade, take that kind of trade. I will go back to the left side and I will choose this level. I know that if the market should come any of this level, there's a level here. I know that on the right side there's another level. You can see a decent level. So I know that if the market should come to any of this level, the market will pass. Even though it closed here and it didn't reach this level, I know it will be pass because it's also a level. That's why you should not always trust on one level. Don't depend on this level. Try to confirm if there is a strong level on that same point. Here we have some level above that level. That means if you are to place your trade, you should try to consider the level of the left side. And I don't always choose levels here. I always go on the left side, choose level. I may choose even go more further to choose any separate level like this. I choose this level, this area as my level. I will not choose any level. So it's just my trading style. You can choose any level on the chart, but try to find out if that level is more tested or it's decent. Try to understand what the market is doing. Okay, that is the major thing. Yeah, if this candle will close as a strong candle like this is a strong candle, right? And if you saw this candle here, this type of candle, this area. You saw this kind of candle. Don't place a put up. Put up. Place a put up. Here, place a call option. Because reason, if you place a put option, the market will try to go down, but it's trying to test the previous candle. Maybe it's very weak. That's why you see that the market will try to go down, then immediately push up. When and where I can expect a fake breakout, and after fake breakout, you see a doji weak candle. Should we expect a morning or evening star pattern to come or trend continuation? So when you are expecting a fake breakout, it's when the market is expected to be exhausted. You are seeing a strong candle, strong candles like this. Then at level you saw a strong candle appear, and the previous candle was very weak. Then you expect that if there's a level, there's any level here like this. You can see I just traced my line. There must be a level here. There must be a level on the left side. There must be a level. You can see level. So you can see here also. So that means the market broke that level. And previously, this is a exhausted candle, a reversal candle. Previous candle is very small. So at this time, you expect that this kind of situation is a fake breakout, not fake breakout. If you are expecting a fake, if you are expecting a real breakout, it means that this type of candles will appear here. This strong bullish candle from the network. Okay. This strong candle or any of these should appear here, and the next candle should be a weak candle like this. So now you now place a call option. That means a strong candle after a strong candle before a weak candle, then place a call option. That means the market will try to go more up. Another thing about trading breakout is that try to check the market pattern. I'm coming to that. Try to check the market pattern. When you are trading, when you are placing your trade, try to check the market pattern. You can see here, you have a resistance level here, resistance level. And here, the market with that level. The market, you might see, maybe you don't know what will be this candle, what will be the next candle here. So this candle close at that level, the rejection, and you place a put, but instead, lost this trade, while the next candle is supposed to be. It means that the market is trying to form a movement like this. Like I told you that this is 1-2 move. You connect from the one to the next 2 move. Then check the third one. The third one is somewhere right here. 1-2 move. So the market is not moving like this. The market is moving like this. It is only moving like this when the market is showing weakness at that level. Then you now give respect to that level. Means that level is still active. But here at this time, you can see this is the first move. The first move. That means you give respect at the first move. And the last one, you also give respect at the last one. But the one in the middle, don't give respect to it. This is the first one, this is the second one, this is the third one. You can see the third one, the second one. You can see the market close at this level, but it didn't reverse. Instead, the market formed a position. That means the one when you are trading, you should always consider the first one and the last one. Let's say, for example, this is the last one. If buyer should come again to this level, to this strong level, the buyer should come to this strong level and got rejected from this level, the sellers will enter. So trading like this, you should observe that this is what the market is doing, not ranging, not sideways movement, but a trendy move. So you might see that this is a breakout. This candle is a level, and this candle break this level. You might say, this is a breakout. This candle is supposed to close as a green, but you didn't close. But you didn't observe that the market is trying to find the next which is already found one here. So it's trying to find the next. That means the market is moving like this. So the sellers are changing their entry from here to here, and from here to here, and from here to here, and from here to here. Now the buyers also are changing from level. You can see this is the buyer's entry also. Here, here. The buyers also are changing their level from here to here, from here to here, from here to here. So now, if you are trading, you should know that if the market should come to this level, then you place your trade. Higher option. But here the market didn't reach this level. Only God created, but it didn't reach this level. So you should consider it that the power of seller is still more, the sellers are still more powerful. That's why the next candle comes back. But if we close here with this rejection, we place a call. And this kind of market is a breakout. You can see it break this level. It broke this level. So you shouldn't consider that this next level is here. You shouldn't say that the next level is here after breaking this level. Like I said, that there's more possibility that these buyers will enter the market or sellers will enter the market after breakout. There's more possibility. Either we continue or if we enter. But here the market is moving in a continuous uptrend. In a continuous uptrend, the market is moving like this. Market is moving like this, 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 like this. So you should know that the market is changing direction after it touched this, after touching resistance level, then push up. Again, it went back again, touching this resistance level, then push up. It's touching this change of polarity, then push up again. And again, it's trying to come down, touching this support level, this resistance level, then push up. Now it comes down very massive. Touching this support level, this resistance level, then push up a little bit. Telling you that the buyers didn't want to go more up. So the sellers still continue the market. It's telling you that now, at this time, the sellers are now more powerful than buyers. So if you are a forex trader, you shouldn't think twice. Just place a sell. Just place a sell. That's why observing candlestick psychology is very much important in forex too. Because once you are able to understand the behavior of buyers and sellers in the market, you can predict the next candle easily in forex, or you can predict the next market move in forex easily. You know that the buyers are more powerful now, the sellers are now more powerful here. So at any point, the sellers will not expect. Just place a sell order when you are trading forex. Even though the market will try to go up, but still market will be going down, going down. So just place a sell order. So when you are trading and you want to identify if it's a fake breakout, try to check if they want to move. If the market broke the level on horizontally, try to check if the market is trying to form a want to move. Like here, you broke this level, this long way. So you may say this is a new high. They want to place a call option. No, it's not. This is not a new high. The market is trying to form on trending move. And now you can see this is a level, this market broke it. And what is this candle telling you? This is exhausted candle for the past. If this candle, the previous candle was very weak. Now, if this candle, let's say this is the candle, this is the bullish candle that appear here, and this spinning top appear here, and this one appear here, and you saw this strong bullish candle. Don't go with put option. Next candle. Go with call option. Because here I didn't see any possibility to go with put option, because here I didn't see any rejection. No rejection. And I only see some traders activity and buying pressure. The strong candle, strong body, not weak body like this bullish candle. So the buyers here that is being exhausted, we try to use the little power that this one has to continue the market. If we try to use the little power that this one has to continue the market, so the next candle will be bullish. But here we find a big candle having both upper rejection and lower rejection. So consider this candle as a big breakout, because already if this is strong candle, right? But if the buyers will try to go more up because the strong sellers entry because of the reversal candlestick, the sellers will try to go down. But the candle we also prove to seller that he has power to go more up, but he will not overcome seller because already the buyers have become weak. This spinning top candle, a weak candle after a strong candle. So this candle that appear, this body that appear here, the next candle will be green. Next candle will be green. Don't think twice. Next candle will be green. It will not be fast. That's why you see me placing trade in momentum. You might not understand why I'm placing trade in momentum like this. If I take trade, you see me placing put option here. Placing put option here. Next one, I just place a call option. I know what the market is doing. I understand what the market is doing. I know that previous candle, if I should place, let's say this is a weak candle, and there's a level here, it goes with the rejection. Consider these two things. If buyers should enter the market, with this strong candle that formed that close here, allow the buyer to enter the market? No, it will only be rejected here. But with this strong candle that closed after the spirit candle, allow the seller or the buyer to continue the market? No, just basic put. The first thing I would do when I'm trading the momentum like this is check the last candle and check the previous candle. Check the possibilities. If the possibility is higher, then I'll know what to do. Check the last candle, the previous candle, then I'll know what to do. Then check the last candle. If I see this, then I will have confidence in placing a trade. Now, if this candle here, if this candle, this bullish and bearish candle is the one that appeared here after this one, or before this one, then I will place a call option because I know this is a weak candle. Okay. No problem. Because I know this is a weak candle. So if the buyer should enter, the buyer will also test the weakness of the previous candle to see if it will be able to strong the buyers. But if buyers should test the weakness and see that, oh, I can't be able to dominate the strongness or the strongness of the bearish candle, then give up. You can see that the buyers try here. But on reaching a particular point, they observe that the trend is downtrend, strong downtrend. Previous candle is very strong. So why should I go up? The buyers give up. You confirm on 5-second chart, you see this upper wick, it's a buyer's end. Buyers give up. So you should try to understand. They can see some rejection here, some rejection from this level. This level didn't reach this level. Means that the buyers are more powerful here. And this candle closed here with a strong candle. So the buyer tested it that here there's a level here. And this candle didn't reach that level before it start getting rejection. It's telling you that the buyers are more powerful here. And this candle closed. This is a faster candlestick. That's why the buyers try to enter the market. On testing this here, you might say that how did they test it? Did they go back again to test it? No. The logic of it is that let me show you very well. The logic behind it is that this whole area is a buyer's area. It's a buyer's area. It's just that there are some buyers present here, not buyer's area. Let me say it's just that there are some buyers present. So the buyers will try to test the buyer's area here. When they enter the market, we try. That means they are trying to connect the buyer's activity here to check. Once they connect and see that this candle is very weak, close with a rejection, the buyers will now have the full confidence that there are some buyers here. They will try to connect. Just like when you are playing puzzle game, this one connect to this one, this one connect to this one, this one connect, this one connect, this one connect, this one connect. So from here to here, if the market will try to go more up again, go like this, trying to find where the buyer buyers started, means that it connects. So here the buyers are testing their buyers' activities in this area. That's why it was able to close as a bullish. It tests this rejection here, test the weakness that the exhaustion of this candle, it was able to close as a bullish. Why the next one closed as a bullish candle, telling you that this is a reversal candlestick at this area. Some of you might go with put option here, but it is wrong. You should know that the trend is very much important. I'll show you. Here we have uptrend. You can see uptrend, and this candle close here. This weak candle close here at the previous resistance level. This is the change of polarity. Close here at the resistance level, telling you that the buyers are not powerful at this time to go more. But it is now for the buyer to show weakness, for the seller to come in. Here, the buyer show that we are active in the market. After the seller broke this level, the buyer show that we are active in the market, close as a bullish. Now, in closing as a bullish, the power of buyers increases. You can see very from small body to big body. That means the buyers now increase. Then, assuming that this candle now close like a strong candle like this, strong bullish candle like this, that means the buyers are now becoming more powerful to go more. But here, you now close with something like a doji candlestick with a weak body, telling you that the buyers are not strong enough to gain. They're weak. That's what weak buyers say. So sellers will continue. We take advantage of this to continue that trend. That's why you're seeing seller movement, a rapid seller movement on the next trend. So when you observe it on the market, when you try to understand what the market is doing, you can have some good winning ratios. Now, someone say I should explain about the fix when you are trading, which is very much important. Look at here. We have, let me explain this. We have the rejection here, and we have the upper rejection here and upper rejection. This tells you that buyers are more and the buyers are here. This line I draw here, if you check back, let's check and see. If you check back, you see that there's a level here. Buyers entry point. You can see. See rejection. So it is the buyer's entry point. And when it got rejected, it's still far from the body. That's why the next candle closed. And when the next candle closed, it closed as a reversal candlestick. Like I told you that in this type of situation, you should expect something like hammer candlestick. Most of the time, if it is bullish, if it is bullish movement, maybe the level is here and the candle closed like this. You most of the time you observe that the next candle that will form will close like a hammer candlestick, and the next candle will be bullish. So the logic behind it is that is what I want to explain in this candle. Here on the left side, we have already checked that this is buyer's area. Buyer's area. The buyers will check the market. The candle close here. On closing here, the candle open here. The buyers try to go more up, telling you that the buyers are here. Buyers are here. There's a gap for the buyers to go more up. Buyers are here. And because of this downtrend, the sellers push the price lower, forming a strong red candle, and then it closed exactly at that buyer's area with the rejection. So the buyers now have the full confidence to enter the market. Now, on one condition, what should you expect if you have to go with sellers on the next candle? If you have to go with sellers on the next candle, you should not expect the upper rejection here. There must be, there's supposed not to be upper rejection in this candle. That means there's no way for the buyer to connect again. When this candle didn't close upper rejection, there's no way for the buyer to connect. But it gives way for the buyer to connect, and this candle close at the buyer's area. So it's a chance that the buyers will enter the market. Even after entering the market, it closed, still form a bullish candle, telling you that the buyers have the chances of going more up. So the sellers here, while the buyers are. The buyers try to connect of this, trying to go more up, this buying pressure. Like I said, this week you are seeing here is a buying pressure. And the seller's entry point is here. This is a buying pressure because before this week was created, is that when this candle closed, a bullish candle is trying to form, but on reaching this particular point, the sellers reject it. So now, this bullish that is forming here at that time is buying pressure. Buying pressure that the buyers tell the market close, the buyers want to go more up. So from year to year, it's a buying pressure. With this week, the buying pressure, but on reaching this point, the sellers reject. So this week here is a buying pressure, but rejected from seller. And this candle closed at the buyer's area, which we have checked on the left side. Close with a rejection, so buyers enter the market. This is the logic behind these two candles. That is, these two hammer candlesticks. The logic behind it. Show you another one. This one also. There's a buyer's entry here. And then the line that we draw, there's some buyers here. So this candle got rejected from this level. Close here. Then buyers try to move up. So here to here, buying pressure from here to here. And this candle, the sellers reject the market here. This candle close at the this candle got rejected from sellers here at this point. And again, the sellers reject, and this candle close with the rejection. Sellers put the price lower. On reaching this point, buyers reject it. So the buyers are present from this rejection. And the chart is not stable. The buyers are present from this rejection, and here, and to this level here. So this is a buyer's activity from this rejection, lower rejection to this point here, and then here. That means at this area, the buyers are dominating the market at this area. That's why the next candle form a bullish candle with a upper with a strong rejection, a strong buying pressure. So this is a strong buying pressure. Close with a rejection, meaning that the sellers are present here. Some of you might be planning to or deciding to go with call option here, which is wrong. You can see this is also from the network. This is buyer's area. This candle close because of buyer's activities here. The buyers are formed here, and the buyers try to go more of but rejected from seller. So the sellers are here, not here, and it's very good for you to place a call option. Why? Because you check it that here the buyers are here, this candle close here. Why is it that this candle didn't form a bullish candle? Why is it that this candle didn't form a bullish candle? Number one reason is that check the trend. That's why the trend is very much important. If you check that the sellers are now in power now, you can see the trend is very strong, very strong. Even only a strong candle that can form a second bullish candle. Only a strong bullish candle that can. But here the candle is very weak. You can see that the first candle was very strong. First candle was very strong, strong body, followed by this one, strong body. Then this one become weak. So because of the trend that make this candle become so, you should not place a call option here. Not place a call option. So it's a reversal candlestick, but don't place a call option. Don't place a call option. Try to observe. But if there are some, I'm trying to tell you some more possibility of going with buyers here. If there are some weak candles. Let's say like this weak candles here, and you saw it here. Why the next candle was green? Here also you saw it here again, and the next candle was green. That means, and here it appear also, the next candle is supposed to be green. But here the power of buyers increase here, reduce here, and then reduce totally. That's why the seller take advantage of the trend to continue their movement, they continue their trend downward. So you should try to observe the market movement, market before you place your trade. The trend is very much important while taking trade. Even though your analysis is telling you that the most possibility you should go with buyers or sellers, check the trend, observe the candles, observe the market movement before you place your trade. Okay, any more questions? Any more questions? Okay, I think there's no question. Let me test you guys something I want to do. Okay, now guys, look at it. Let's say the price is here. The price is here. So every one of you will be speaking. That's why I almost every one of you. Let's say the price is here, and you want to predict the next candle. What are your analysis before you predict the next candle? Let's say the price is here. I think let me almost all everyone. So I will start from. I can't pronounce your name, but let me do that on the chat. Okay, I think I start from the name I just typed because I can't pronounce the name. So when you're analyzing the market like this, what will be your analysis? So you are free to talk. You just analyze the market, then try to predict what will be the next candle. So you are free to talk. Like choosing the most possibilities. Okay, you are free to talk. So you are waiting. So yeah, I have here 10 members. So all of you will participate on it. Don't fear, because I want to clear your doubts in trading. When you are trading, I want to clear your doubts while you are trading. Okay, I start from you. What will be the next candle? And try to analyze the candle, analyze the market. So we are going to predict at least 3 candles here, 3 candles here. So we are going to predict the 3 candles. So what will be the next candle? You are free to talk. Your analysis and your prediction.
Call option.
Put option?
No. Call.
Call option. Okay, what are the reasons why you take the call option?
Because the candle is strong.
Okay.
It broke the seller's area.
Is it this area?
Yes.
Okay.
And we have a minor uptrend.
Okay, minor uptrend.
Yes.
I want the strong candle.
But we have also seller activity in that last candle.
Which one?
And the major downtrend.
Okay, for sellers, major downtrend 1. Okay,
Yes, and rejections.
rejection 2. Okay,
Yes.
okay, for the sellers.
Yes, yes.
Okay, for the buyers, how many reasons do you have for the buyers?
Minor uptrend.
Uptrend 1.
Last candle broke the seller's area.
Sellers area 2.
And momentum, but momentum is not so strong.
Okay, momentum 3. Okay.
Yes, that's my reason for call, but it's not.
So we have 3 reasons for placing call option and 2 reasons for placing put option. Okay. By George, and try to ask that. Okay. The next one I have here with me is Jeff. Okay, you are the next one. Jeff, what is your prediction and what is your analysis? Your prediction and your analysis.
Me?
I
No.
because
What do you say? Yeah?
green rejections,
Rejections 1.
downtrend,
The trend, is it the downtrend?
hello?
1. Uh-huh. You can speak. You are free to speak.
Hello? I'm in trouble with my network. Let me change my network.
Okay, no problem. Okay, I think the next one.
Just 1 minute. 1 minute.
No problem. Okay, before 1 minute, let's take next person. Mr. Edward.
Okay.
Okay.
Yes.
Okay.
I'm seeing to my immediate left. Can you hear me?
I'm listening to you. You are listening.
Hello.
Yes.
What do you say?
You can hear. Okay. I can see this major downtrend here.
Downtrend. Okay. One reason.
Is a downtrend there. I'm also seeing a sellers area here.
Yes. Okay. Sellers. Where? Which area? Okay. Yeah.
That's two. And rejections. My prediction number 1 is for
the trend 1. Sellers
yes.
2.
Yeah, those are 2 now.
Okay. Rejection. You said you mentioned something. Rejection. Right. That is 3. So we have 3 reasons for put
Hello.
You.
Yes, and the rejections.
Yes, that is 3 reasons.
The candle is not strong. It's weak for me. I think it's a weak candle.
Okay, that is 4 reasons.
Yeah, so for buy, I have a minor uptrend.
Okay, minor uptrend 1.
And also the seems like the last candle has closed above the reversal area.
That is new. You broke the sellers area 2.
And with a new high.
New high 3.
Yes.
Okay, that is for call option.
So I'll do a put option.
Okay, for put option you have 4 reasons. For call
Yeah.
option you have 3 reasons.
Uh, 3. Yes.
Okay, before we judge that, let's go for the next question. Okay.
Hello. Hello.
What
Yes.
okay? You are listening.
How there, sir?
Okay, you have for you. Okay. So we are still Mr. Edward, we are waiting for you.
Okay. Um, I want to go my analysis. Though I can see a strong bearish moment
Found very
on the left hand side.
and reason.
How there, sir? You can't hear me. Then rejection, second reason.
Okay,
I think those are the ones I can see.
okay for put option.
Put option, yes.
For what of call option?
I'm seeing a minor option. I'm seeing a momentum in the trend.
So
The buyers broke the seller's area.
3 reasons.
The next turning point is still far.
Okay, 4 reasons.
Then I believe the buyers want to make the same momentum on the left hand side.
Okay, okay, that's fine. So you have
So
for placing call option and 2 reasons for placing put option. Okay, let's check next. Okay, sorry if I can't pronounce your name very well. I think the next person is no. I think I pronounced the name. So you are free to talk. Don't fear. That is one of the controlling emotion. You are free to talk. You are free to analyze the candidate. Okay, okay, okay. So you are free to talk. The next person, I can't pronounce your name very well. No, Noja. Okay,
Yes, hello.
okay.
I will go with the higher option.
What are your analysis?
I think the market will divergence after this strong bearish candles. The market start to divergence and go up.
Okay, one.
This is one, and I saw a new high.
Right, 2 reasons.
And I see only one red candle after,
Okay, theory reason.
yes, after 3 candle green, there is only one candle.
Theory reason.
This is 3. With lower, I have only the reason of beige candle on the left.
Left side. That is for put option.
Yes, only one. I don't have anyone.
Only one reason.
Yes, only one reason. So I will go with higher.
Let's check. Okay, Praveen. And the next, what is your prediction and your analysis? Yeah, the next, what is your prediction and your analysis? Praveen. Okay. Praveen, are you here? Don't fear. Just speak out your prediction and your analysis. Okay, I think I'm taking too much of time. So let's now solve the. Okay, some say they go with call option. Some say they go with put option. But here, let me start my own analysis. Number one, the trend. Like I said, that don't go against final. Number two, there are some sellers at this area. At this area. Some sellers at this. He broke the sellers area. Two reason. A strong rejection from below. Strong buying pressure from buyers. Three reason. A new high in the spinning top candle to continue the buyer's trend. Four reason. So I have four reasons for call option. Four reason. Then for put option, I have number one, downtrend, one reason, and a rejection, sellers, two reasons. Once again, I think there's a level here. Check. The level here. There's a level. There's a level here, and this candle close at that level with a rejection. So here I have one reason to go the sellers. Seller. Number one reason the trend, the rejection. Number four reason, number three reason level. Then for buyers, I have the trend. One reason strong buyers rejection, buying pressure. Two reason is this level. Three reason, and there's a new high in the market. A new high. I have four reasons. So let's check if our prediction is right. Those of us that go with buyers and those of us that go with sellers. So let's check. You can see the next candle close as a strong green candle. It means that our prediction is right. That means we have gone for those of you that replace those of you that you predict a call option. That means you are right. And for the put option, I think we are wrong in this kind of market situation. Number one, because you're only looking at this rejection, but you didn't observe the buyer's possibility. You can see uptrend, some buyers rejection telling you that the buyers want to go more of one reason, two reasons. The trend, one reason, rejections, two reasons. It broke the previous seller's area, the new high in the market, four reasons. Therefore, sellers, one, downtrend, level, and rejection, three reasons. Okay, so those of us that go for call option, our prediction is right. Now, at this time, what will be the next candle? What will be the next candle? So let's see. Let's start again. I think this will be last. Red. Some say red. Why is he red? How is he red? Some say red. Why red?
Okay.
It will be right because you can see here a exhaust candle, and before this exhaust candle, the spinning show that the buyer become to be weak.
Yes, that is two reasons. Okay.
So with the major trend, downtrend.
Okay, three reasons.
And the rejection on the Marubuzu.
This one?
Yes, the small rejection.
Okay, four reasons.
Okay. So that's all.
Okay. Four reasons. Okay. Now the next one, the next person.
Hello.
Yes.
I think it will be green because I saw on the left side there is a gap.
Okay, there's a gap.
Did you see the gap here on the left?
Okay.
No, not here. Yeah, this one.
Which one?
Yes.
This one.
This one. No. There is a gap between the hammer green and the big one green.
This one?
On the left? Yeah, no, on the left. Also on the left. No, on the right? In the middle. In the middle? No. On the right, go right. A little right. Yes, here. No. Yeah. After this bearish candle, there is two green candle, and after that there is a gap and a strong bullish candle. Did you see it?
Like this, after this bearish candle, two green.
No, after this three bearish candle.
This one.
After this three.
Yeah, there's a gap on the level.
Yes, on the level between the two green and one strong green. Yes, here.
Okay.
After this. No, after this. Yeah, here.
This?
No.
Yes, there.
Yes, this one.
Okay.
Yeah, this one. So there is a strong and there is a strong buyers here.
One reason.
So I think this is the most reason, I think. And after this strong green, the current green,
okay.
The next seller's area is so far from here.
This one.
Yeah, this one. So it should be green after this one.
Okay, after this bullish candle should be green.
Yeah.
Okay, next person.
That's all.
Next person. What will be your So if you have the opportunity to speak, you can speak.
I think call option 2.
Call option, or why you play?
Because there is a level there, but the last green candle broke the level.
Okay.
And for last candle, the spin top doesn't have seller pressure in the last candle. There is no lower rejection.
This candle,
Yes, yes.
there is so.
So it means the sellers lost power there.
Which one?
Yes. So it's so strong that it broke another level, another rejection point there. Yes. So with the momentum and the minor uptrend, there is a more chance for
Okay.
another call.
What are your reason for placing put option?
For put option, I have on the support point SNR level that can be work as a resistor now, and also we have a little rejection in the last candle.
Okay.
That's the only two option. Also minor downtrend, but major downtrend. Sorry.
Okay. Major downtrend.
So it's 4 against 3 or no?
Next person.
I'm thinking it's to be a call.
Call. Or why?
Number one is I'm thinking I'm seeing a downtrend to the left.
Okay, downtrend.
Hello?
One reason.
Hello.
Okay, we are listening.
And I'm considering that candle to be a marubozu because
is it this bullish candle?
hello? Yeah, the running candle I consider to be marubozu.
It's not the Marboso because it has very small lower rejection.
Okay.
Okay.
And it has also closed at a level.
The candle close at the level. Which level are you talking about?
Hello? Buyer's turning point.
Yeah, okay. Where?
It's very close. Yeah, it closed there. Both are religion.
Okay.
Hello?
Which one again?
Hello? Yeah, for put, I see a momentum building up.
Okay, momentum.
Okay. Four candles. I see 4 green candles. That tells me there's a momentum.
Okay, 4 green candles. Okay. There's two reasons.
Hello?
Is that all?
Yes, that's why I would go for. Yeah. Hello.
Now, what are your final prediction now? Is it the call or put? Hello?
A put.
Call or put?
Sorry, yeah, put lower.
Okay, lower.
Lower.
No problem. So, I think some are chatting. Let me check. Call option. Call option. Okay. So I think there's no other. Now, on my own prediction, if I want to predict this next candle here, the first thing I will look at this trend. I have one reason. A strong bullish candle. A strong bullish candle. I have 2 reasons. Buyer's momentum. I have 3 reasons. And on this level, this next level, which I expected the market to reverse, not this one. So I didn't expect the market to reverse here because this is not the strong, this is the level, this is the big level, this point right here. But this strong candle didn't got rejection, it didn't got strong rejection from that level. So that's why you need to observe the candle. You can see that all these candles, this candle even closed out at that level, it didn't reverse. This one also, it didn't reverse. So it is when the candle will close with a strong rejection like this before it reverse. So I didn't expect the market to reverse here. I have 4 reasons. This is a call option. Then which I expect where this where I expect the market to reverse. This next level. So next level is still far. I have 5 reasons. Now for put option, I have a seller's entry. 1. There's a level. Yes, you can count it as a level. 2. A rejection from that level. 3. A strong candle, a sign of reversal. 4. Saying there's no other one again. No other one. So I have 4 reasons to place put option and 5 reasons to place call option. So if I should place my trade, I will go with this most possibility. 1, the trend. 2, bullish trend. 3, strong candle. 4, a strong candle. It didn't close at the strong level because it's not the strong level. Because I can see some rejection, bullish rejection, but they didn't reverse. So it's not a strong level. So the candle didn't close at the strong level. 4, the next level is here. 5, I have so many reasons to place a call option. Then for put option, downtrend. 1, a level, still a level. 2, rejection at the level. 3, and a strong candle, a sign of reversal. 4. So I have 4 reasons to place put option and 5 reasons to place a call option. There's one thing I will explain to you guys. When you are placing a trade, try to observe the previous candles. Try to check how the market behaved on that level. Previous candle, how they behave on that level. Yeah. You can see here the buyers got rejected from this level. You know, this is a level. This is a turning point for the buyers, a level. But this candle got rejected from that level, didn't reverse. Here also it got rejected from that level, didn't reverse. And here also, you can see they have the same rejection. They have the same rejection, very small rejection. This one also small rejection. This one also small rejection. Both of them touch the level. These two ones, they touch the level, but they didn't reverse. So here, I know that it will not reverse because of what happened here. It will not reverse. So that's why I have the possibility of going with call option because I'm expecting the market to reverse here. Reverse here. So this way I'm expecting the market to reverse. So all this one level, just a minor level. I didn't see any reverse here. To reverse for put option. So I'll go with call option. So let's see. So you can see it close with a with a strong bullish candle. And this is where I say I expected the market to reverse this level. Close exactly at that level. So you should have the more possibility of placing put option or call option. Okay, I have tested you guys for 2 candles. So go and practice this. Once you want to practice this, you will know that the market will start obeying your command. This is one of the secret things that professional will not tell you. Secret things that professional will not tell you. Going with the more possibilities in the chart. You can see if I should go, if I predict the next candle here, if I should predict the next candle, let's say I want to place a call option. Okay, right? Find our position. But let's say I want to go with call option. Here I have a minor trend. 1. A strong buyer's movement. 2. Strong rejection from buyers. 3. I think there's no other thing again. Strong uptrend. 1. Minor bullish trend. 2. Strong rejection from buyers, that is buying pressure. A strong candle, that is 3. Now for sellers, one, a strong level. 2, sellers. 3, a reversal candlestick. A reversal candlestick is when the market goes like this. Rejection, very small rejection, and it's very long stay. That is, stay is longer than the upper rejection, and it goes exactly at that level. So it is a reversal candlestick. A reversal candlestick. Possibility. Here, the trend is downtrend. 1, a strong level. 2, rejection from sellers at that level. 3, reversal candlestick. 4. I think that is the most possibility. Then for buyers, minor uptrend. 1, strong bullish movement. 2, buying pressure. A lower rejection for buyers. I think 3. So now if I should place my trade, I will go with put option because of these more possibilities from sellers. So I will just place a put option here. Possibility. So you can see a strong red, a strong bearish candle on this level. You can see why I say that this is the next level which I'm expecting, because I didn't see any strong level. You might say that there's a level here. Why didn't I choose this level? I can't choose this level because this is not the strong, this is not the level. That means that I understand what the market is doing. I understand that this candle that formed, this strong bullish candle that formed, the next candle that will form will be a strong bullish candle. So it is not good for the candle to now close at this level. To close here. If we should close at this level, that means if we should close at this level, that means it's expected to touch the next level. So I know that this is where the market will pass. That's why I say knowing or understanding what the market is doing before you place your trade. Try to understand, try to observe. If you can do this, you can place your trade confidently. And when you practice this, what we just did now, by placing your trade or by finding the more possibilities, you can decide what will be the next candle. This is a strong candle. The trend is downtrend. There's a level here. That's a level. The trend is uptrend. Uptrend. This is a minor uptrend. And there's some level here, and there's a rejection. And this is a strong candle, a sign of reversal. For sellers, downtrend. Strong candle with a strong selling pressure. Strong candle. Then strong selling pressure. And put bearish engulfing. So it closed at this level. So we didn't know if we close as a bearish or bullish. Because here the trend is downtrend, strong candle with a strong selling pressure, the rejection from that, and so it is bigger than buyers. Then for call option, we have minor trend, small rejection, and level. So we have 3 possibilities for buyers, and the sellers is 4 possible. So that means we go with sellers. But if you are confused, don't place your trade. If you are confused, don't place your trade. This is the level, the trend, strong candle with a rejection from sellers, a bearish engulfing, a strong candle 1, the trend 2, rejection from sellers 3, a bearish engulfing or I think the level, he broke this level. You can see there are so many levels here, but choose the most decent level. This is a level. He broke this level. So we have at least 4 reasons to do with put option. But for all option, trend and think rejection. The trend rejection. Okay, and the strong candle, a reversal candle. So we have 3 reasons to go with put of call option. That means we should go with the most possibilities of placing put option. Which one? The weak rejection counts. Is it the upper weak or the lower weak? All wicks on the candle they count, both the upper and the lower weak. Okay, lower weak. It counts because here we are seeing some rejection here, so bias entry. So here also you can see some rejection from bias entry, but you can observe that this rejection is not the same thing as others reject, like the previous rejection that we have here. Strong rejection. Strong rejection, the opposite side. Here also strong rejection, but here we are seeing very small rejection. So it counts. And if you want to go with buyers or you want to go with sellers, there must be a strong rejection like this one, or like all this one, the opposite side, or like this one, a strong rejection like this. So there must be a rejection like that before you go with buyers. So a small rejection counts on the trend, on the market, and works so much. So that means you must observe the rejection, observe the market rejection before you place your trade. Don't just place your trade anyhow. You can see this candle. Now, what are things that you observe in this market? What are the things that you observe? Let's say you just open your chart and you saw the market is like this. You saw that the market is like this. What are the things you observe here? For one, market is like this. The trend is down. But on reaching this area, market starts forming a ranging. So it means that the trend is down and this is the ranging market. This is a ranging market. The ranging market. The ranging market. That means the market is moving from the highest point to the lowest point, bouncing from the highest point, lowest point, then from the lowest point to the highest point. So this is a ranging market. After downtrend, a ranging market. So this, when you're analyzing market like this, say downtrend and a ranging market here. So that means the market is bouncing from the lowest point to the highest point, or from the highest point to the lowest point. So in this type of situation, check, after you analyze like that, now check the candles, if they are friendly, if they want you to use them, or if they don't want you to use them. You can see some rejection, so many rejection, weak candles, rejection, weak candles, rejection. That means at any time, it might happen that here, if you place a put option, maybe you know that the candle, the next candle will be a put option, and you place a put option, you just saw a strong red candle. You place a put option, and maybe your entry was triggered here, somewhere here. And what happened? The candle, the market closed above your entry. Now you are stopped out of the trade. So it means that when such thing will happen, before that thing will happen, before you fall victim of that, if you always check the market situation before you place your trade, you can see it happened to me most of the time. You can see a rejection, strong rejection. Here also strong rejection. That means any market that will close in that area, we also got a strong rejection. So I should be careful to wait for either a marginal of safety. That is, if I'm going to place a put option, I will wait for the candle to go higher if I place a put option. But maybe I didn't observe it, that there are so many rejections. I just saw the market like this and I placed my trade. Once I placed my trade was triggered somewhere here, which I have the mind or the happiness that my trade, the market will close below my entry. But what happened? A strong rejection, because here we can see so many rejections, so many rejections, so many rejections. It's better for me to avoid, or I wait when the market leave that area, because this is a strong rejection area. So this is a strong rejections area, a strong rejections area. So if market should come to that level, the market will not be stable. The market will not be stable. The market will be jumping from one level, from one level, support level to the resistance, jumping like this, going like this, going like this, going like this, going like this. So the market will not stable once it hits that area. So it is better for me to change the pair, or or I wait for the market to leave that area before I place my trade. So observe and understand the market situation, the market structure before you place your trade. Like here, we have so many strong rejections. Here also lower strong rejection. So on the left side, if I say this one, I thought after this candle, this candle will be green. But I saw that the candle went down. I was thinking that the market will go to my head. But what happened? It closed above my head, telling me that the market is at the rejection area. So at the rejection area, it is better for me not to take trade there, or I wait for the market to leave that area. Then I place my trade on the next level. So when you see such kind of situation, don't place your trade. You can see so many lower rejection. That means this lower rejection also, when the market will reach that level, we also behave the way it behaves. And also, I want to show you that, I want to say it again, don't draw too much level on the chart. Try to trade like a professional. Don't be a novice. Trade like a professional. Even most of the time, I don't draw level, because I'm making video. I want people to understand what I'm doing. That's why I trade on level. I can just check the market like this, go left side, check again, then I place my trade. Once I place my trade, I already know what will happen. So I will not need, there's no need for me to be drawing levels, because I want people to learn. That's why I draw level, for them to know exactly the level I choose. For them to know exactly the level I choose. If I choose this level, that means I'm choosing this level. If I choose this point, that means I'm choosing this point. But for me, if I'm the one I'm trading, I will not draw it. I know that I already know there's a level here. Then I will check where this candle goes. Already, this dot line you are seeing here already told you that it already is working as a line on the chart. So try to trade like a professional, not a novice, not amateur, because if you think big for yourself, you become bigger. But if you think lower for yourself, you become lower. So try to trade like a novice, like a professional, not novice. And when you are trading, don't go against the market condition. Try to know what the market is doing. I always said that. Try to know what the market is doing. No say you want to focus on levels alone. That is a level. Market will reach that level to reverse. Try to know that before this market will reach that level, where does it start? Here I saw a level here. Maybe there's a level here. This level. And I know that This level I choose here, the market broke this level. And then again, it's trying to head, come down this level. Maybe the price was here. And I saw the sign that the sellers are trying to enter the market was stopped by buyers, except the sellers become strong and buyers. I know that if I see any strong movement, I know that next level that the market will reverse is here. Next possible reversal. So I'm following the market the way it moves, and the market also is following the way I command it because I'm trading according to market movement, according to the way the market moves. You can see after this rejection, the buyers close here, the buyers try to go more, and this kind of close at the buyers area, so buyers enter. I know that after buyers enter, the sign that is a sign that the buyers are now active in the market. So I will not check this candle. Will it close with a rejection, or did it close exactly at this level, or will the trend stop the candle? If I see all these reasons, I will place my trade with confidence. I know that the market will still go more up because here, after this rejection, the buyers entered, and now a bullish candle, no upper rejection, and there's no strong level. There's no level. The level is here. It broke this level. There's no level, and again the trend is uptrend. So once I see this, there's no need for me to be analyzing for the sellers again. I already know for the sellers that the trend is downtrend. I think the trend is downtrend for the sellers. Only one reason, but I have many reasons to go with buyers. Trend is uptrend. Strong bullish candle, no upper rejection. From here, I can see rejection and the buyer's entry here. And again, the buyer's entry, no upper rejection. It broke this level, and the trend is up. So I have many reasons to do with call option. But for put option, one reason, only the trend is down. Yeah, this one. Okay, after this green, form a red. There are some reasons. One, if you want to know the reason, just check what happened here. Why it for after this green can form a red. Look at here. The trend is down. There's a level here. There's a level. There's a level here. The trend, if I should go at this time, if I should go with buyers, if I want to go with buyers, my analysis would be the trend is uptrend. Rejection from buyers and buyers entry and a level, this level. This support level that changed. If I should go with buyer, I would say level, the strong trend, uptrend, and think rejection from buyers and a bullish candle. So I think I have 2 or 3 reasons to go with buyers. Trend, bullish candle, rejection from buyers, and a reversal candlestick. So I have 3 reasons to go with buyers. Now for sellers, my reason is the trend is downtrend. There's a level. There's a new low. The level, new low. The trend is downtrend, and previous candle is very strong. So I have many reasons to place put option. That's why the next candle was red. Previous candle is very strong, forming something like bearish engulfing. So this candle is very strong. Why this candle is very weak? Compare this bullish candle to this bearish candle. So the bearish candle is very strong than the bullish candle. I have the trend, the level, reversion, new low. Bearish candle is very strong than the bullish candle. That's why the next one. But for buyers, the trend is up. Rejection and the reversal candle. So you have 3 reasons. That's why the next candle was red. So once you have more possibility to go with buyers or sellers, then you can feel confident. But if your analysis is still telling you that the sellers and buyers are the same, don't place your trade. You place your trade, emotion will control you. That is where the emotion will now came. Emotion will now tell you that now you have a doubt about taking trade. So I think you should place put option or call option. So it will not take trade. That is where emotion will now come. There's a new low. There's a new low. Now you might be saying that why is it that this bullish candle is counted as a new low? It's a new low because the seller tried to go down. Yeah. But this is where the seller tried to go down. This one direction goes here. The buyer center line still want to go more down. Creating a new low, closing below previous low on the left side, creating a new low. So the sellers have the more possibility to form bearish now. This one creates a new high. I think the network problem, I don't know. So I think we should stop now. Can you guys satisfy enough? Or if you have any question? If you have any question, go ask now before we stop because I don't know the network. Okay, no question. I think we should stop for now. So guys, go and practice. Practice. And there are so many questions on the group chat which I didn't answer. There are so many questions from the group chat which I didn't answer. So maybe next time you treating that. That means there will be no topic. It's only question. Your question. And I like to entertain questions and suggestions. So if you have questions, you can ask questions of any type. Just feel free to ask questions of any type. And any trade you take and you see that the trade go against you, try to ask question why the trade go against you. So that next time you will adjust your trading, you will adjust yourself whenever you see such situation. And try to know what the market is doing, try to understand, try to analyze and go for the more possibilities before you take your trade. Don't take your trade with double-minded because emotion also work during those times. Double-minded trading. That is when you are taking trade with double-minded, when your mind is telling you to place trade, another mind is telling you to place call option, another mind is telling you to place put option. Don't do that. Once you have this, don't trade. Don't trade at that moment. Trade whenever you feel confident. Whenever you feel confident. And I will inform you guys that anytime you are trading, don't show, just make everything in you to be private. Like this, it has teach me a lesson that anytime I want to withdraw or anything, I will not show anything about my withdrawals or anything because I don't know the problem. Now I'm having a serious problem with them. I can't withdraw my money, a whole 16,000 K, $3,000 on my Skrill account just stuck in there because of I didn't provide the necessary for necessary verification. So it is now a lesson for me that anytime such thing will happen, I will keep everything secret. So keep your things secret. So keep your things secret. Make it private. Don't show everything. If someone tell you to show his your account, don't do it. Maybe he's trying to hack into your account. This is not my first time I will experience that. Someone tried to hack my account some days ago. I mean some months ago. Then I think during last year. So he tried to hack into my account, but I was able to get hold of that person. So that's why you see me that anytime I trade, I don't always show my live account. I don't always show, even most of the time, my picture. Even most of the time, any trade I take, I don't always show. It's only the trade I took, the chart. That is one I'll show because I learned a lesson there. Okay, guys, thank you for the class today. And you should not expect that, okay, there's one thing I wrote on the main group that says next batch will start soon. So if you don't worry, guys, I'll make it free for you guys, but only for the new members. They have to pay, but I'll make it for you guys to pay. So don't worry about that. Don't worry about paying again. So just attend the class. So we start something like fresh. That would be maybe next topic, but we still be treating some recent topic we have learned. Okay. Okay, guys, thank you. If you have any question, just make it known in the group chat. And if you have any doubts in trading, and you have any misunderstanding in trading, try to adjust yourself and follow the market rules. Don't trade anyhow. If you trade anyhow, that is one thing about it. Don't trade anyhow. Don't just place your trade because you saw, because at this time when you are placing a put option here, others traders, they are trying to place a call option. That means the liquidity of this chart here, the liquidity of buyers going more up is more than the seller here. So that means you should not follow what others do. Try to observe the candlestick. Try to observe. If others are placing call options, try to know why they are placing call options. And if you are placing put options, try to observe why they place put options. And always analyze, practice all the time. Control your emotion. Emotion is within you. It's not somewhere else. It's not on this chart. Your emotion is not on this chart. It's within you. So it is easy to be controllable once you know yourself, once you know mind, once you know what you are dealing with, once you know your rights in the market, your full right in the market. So control your emotions. It's easy to control once you know your right, but most of the time it will not be easy. So depression, frustration, all this that you are passing through in trading, it's just a stepping stone. One day that you will become a professional. Just a stepping stone. Like what I passed through, I passed through so many things. So it's a stepping stone for me to become a professional in this trading. So if you are still struggling to know something about the market, keep on trying and don't fear about fail. Don't say you fail too much. Don't fear. Failing or losing is also part of trading. Not 100%, not all the time you'll be winning the trade, but at least your winning ratio should be more than the losing ratio. So don't give up. Always be persistent, be consistent, and be patient. That is one thing. Be patient. Don't what should I say? Don't rush yourself trading. Be patient enough. If you are the kind of person that is trading whenever you see a resistance and you're expecting the market to beat that resistance, wait for the candle to touch that resistance, then place of trade. It's short. Don't say because the opportunity of the market to come back to this level is too far. Let me continue trading. No. If you are the kind of trader that is confused, that you are confused or you don't understand the market very well, wait patiently for the market to come to your favor by placing your trade on the next candle or maybe wait patiently. So don't rush yourself in trading. There's nothing like rushing. Yes, just try that and do same thing, the way I did, the way I always do. 10 trades per day. 10 trades. You can divide it. Is it 3 trades per section or 5 trades per section? Just make it in a section. So just take 10 trades per day. Then if you now, let's say within 1 month, and you now estimate your winning ratio to be 85%, then you are good to trade on live account. But if not, don't trade on live account. If you estimate your winning ratio to be either 85% to 90%, then you can trade on live account. Don't trade if your winning ratio is not up to that, because the market will not always respect you. It will always do so. Okay, just take 10 trades per day. 10 trades per day, and this 10 trades within 1 month, try to estimate your loss and estimate your profit. Try to know where you are weak, when you are strong. Try to know it. So when you observe it and when you know where you are weak, maybe you already saw this candle, you say this is strong candle to go up. So try to know that anytime I see this kind of situation, okay, it already reverse. That means this will also increase your winning ratio. Try to estimate your plan, your daily target, and within 1 month, estimate it and see if your winning ratio is higher than your losing ratio. Once it's higher, that means you go with live account. Go with live account. But if you are having doubts about it, there's nothing you can do about it. It is better to not take trade for, because trading is just like a medicine that you can wipe away all your money. All your money. Trading is not just something like this. Both forex and binary option. Even binary option is even the worst part. Even that binary option can run you down within seconds, within minutes. But the forex, you can still be having hope to win the trade. Okay, if you are trading, stay focused. Don't focus on your losses. Focus on what will be the next time. Don't be confused. Focus on what will be the next time after the loss, after you lost the trade. And if you lost any trade, it is better to look why you lost this trade, so that next time you see that the market behaves that same way, you should know that I will not go against the market rules. So always know the reason why you lost, but don't stick to it that I lost this trade. I don't know why I lost. Don't stick to it. Always know the reason. And if you lost any trade, don't stay. Why don't over analyze the market again? Why you don't say, just go straight. What will be the next candle after this losing trade? So this will give you go ahead of what will be the next candle. This will give you go ahead. And another thing I would say is that when you are taking trade, don't let anything distract your attention, your mind. Let your mind focus on the chart, because this chart we are seeing is just the behavior of buyers and sellers in the market. You can see here the sellers are in power, but here the bullish candle entered with buyers. Here the sellers try to go down, with buyers enter. Sellers try to go down, with buyers. So it means that the market will not give chance for the buyers to form another bullish candle, because already we are seeing some big here, but this body is very strong than previous week candles. So you should know that here the buyers tried 2 times straight, but here it's a different situation entirely. So that means the next candle. So that means you should always observe what the market is doing. Once you do that, you place your trade with confidence. Once you do that, place your trade without fear, and don't be greedy. If you have $1,000 on your account, try to use $100 as your investment, or $50. Because if you are using a whole $1,000, the fear of losing this $1,000 will rise up, that I'm going to lose this money. And if I lose this money, I don't have any money again. So the fear will rise up. But once you invest $100, then the fear will not rise up. The fear that, okay, if it's only $100 we lost, that means I'm going to lose only $100. If I lost, I know my mistake. Okay, guys, this is how you can become a professional trading. Trading is a lifestyle. It's a business, not for the greedy ones. That's why we have so many professional in trading, and we have the losers, the profitable trader, and also we have the losers in trading. The losers are those who are greedy, and the profitable ones are those who understand the market, who obey the market rules, who know what they are doing, those that have plans for their life, for their dreams, for their goals. Those are the profitable market. But for the losers, they always want to be like the profitable one. They don't want to start from scratch. They will want to go forward. They want to become rich at once. They don't want to start from the beginning. So you should not take trade like that. Trade as a business, as something that will impact your life, to change your life. Okay, so guys, I think I've spoken enough. So the word is enough for the wise. And if you have any problem in your trading, just let me know. And if you have anything like say, let me just make a video on it, just let me know. Maybe you're having any problem about the weeks, or you're having any problem about the body of the candle or levels, just let me know if I will be able to make a video on it for you guys. Okay. So I want you guys to become professional. Don't feel like a audience again. Become a professional. Okay, guys, thank you for attending the class once again. I think we should end up the meeting now. Okay. See you guys in the chat. And if you have any question, and if anyone should be telling you to be, anyone asks you for any help, don't answer that person. By trying to get something from you, don't answer that person. So it's better not to answer that person. Okay, guys, thank you once again. See you. Goodbye.